2021's high probability income generator. All right, down to business here. One of the first things I like to mention right off the bat is yes, I turned the camera on. And if you see me looking around quite considerably, that's because I've got monitors here, 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 here. That's right, about 6 different monitors. I'm reading your Q&A over on my far right, and I'm actually watching the market on my far left, the camera smack kind of in the middle over here. All right, the risk disclosure, we're not financial advisors nor a broker dealer. I also like this, no soliciting, no recording, no photography, and don't feed the monkeys. This is why you're here today. So we're going to talk a little bit about Ultima trades and why they're ideal for the current market environment to potentially generate monthly income. I'm going to talk expressly about monthly income. We're going to learn a trading symbol almost right off the bat over here that we actually use and professionals use on a daily basis to be able to generate different types of Ultima trades. You're going to learn how and where you can find edge as a retail trader. Listen, if you've never heard that terminology of edge, well, I'll discuss that in quite some detail today. And I also want everybody to know, before I even get deeply into this, okay, whether you're brand new, whether you have some, pretty decent experience in trade, I really think that both sides of that equation are going to get, a tremendous amount out of course, today's, Ultimate Trades presentation. We're going to talk about how to reap the benefits of high probability trades while learning little known secrets to not take, huge losses over there. And of course, we're going to find which products make the most viable candidates and which products are a recipe for disaster. So if you came here today and you're like, he's going to talk about AMC. No, I'm not. That would be one of the recipes for disaster. All right, a few housekeeping items as we get started today. Listen, our gift to you, stay with me right until the end of today's webcast. The reason I say that is we will provide to you an indicator that I use just incessantly throughout almost every trading session, and that is the auto expected move indicator. I'm going to show it to you here momentarily, but I'll just clarify, okay? Our gift to you for tuning in for today's presentation, okay, is to present you an expected move indicator. As I said a moment ago, I use this continuously. There's not a trading session that ever goes by that I do not, okay, either reference, look at, or in some way, shape, or form construct a trade around expected move. We do this simply because we feel it is an indicator that not only do I mention it several times throughout the course of today's presentation, but again, it's an indicator that we don't want you to go without. So it's a $500 value. We will give you a link specifically to be able to grab that indicator at the end of today's presentation. This is exactly what the indicator looks like. Now, one of the things that I really like to do is to keep these presentations a bit more dynamic. And by that, I simply mean I don't like to do presentations anymore when the marketplace is closed. So the market's open and the market is absolutely unequivocally open today. We're going to talk a little bit about some of the indicators. And so I'll bring up a chart, and specifically the indicator that I was showing you a moment ago is actually expected move. Here it is. Okay, you can see I'm working some orders in here right now, but what the expected move indicator is and does, there's ultimately 3 lines on the screen. Those 3 lines, okay, are justified by looking at option pricing, but this is a forward-looking indicator. It's actually using forward option pricing. So at the beginning of any given week, it's already showing you what the week is going to look like, okay, based on what option pricing is. So in effect, what you can do with this indicator, it kind of justifies if markets are at extremes, okay? It tells you if markets are efficient or wildly inefficient. And I'll just bring this up because this is the energy sector, okay? It's really, it's kind of a cool way to look at this, but in the energy sector, here's a breach of expected move. It's wild breach of expected move. The week after that, here's a breach of expected move. The week after that, here's a breach of expected move. The week after that, here's a breach of expected move. You literally had 4 consecutive weeks with a breach of expected move. People, it is unheard of. It is uncanny to see the energy sector breach expected move. It tells you how wild things have really gotten. And I start with that. Before we get into anything, okay, about trading and so forth, immediately, we're going to hand you an indicator that literally gives you, okay, right at your fingertips, the ability to see if markets are just downright wild on a statistical basis. And this is a very, people like to look at like MACDs and Fibonacci's and Bollinger Bands. This is a very what we term quantitative indicator. All right, onward and upward from there. This again, we will provide you right at the end of today's webcast. Few housekeeping items: shut the door, turn off Skype chat, maybe whatever else is distracting you. Close Facebook, permanently close Facebook. Turn your phones in silent mode. Definitely kick out the kids. Definitely kick out the grandkids. The dog can stay, but you took the time to really be here. And I'm going to just tell you right now, I'm going to throw a lot at you in the next probably 90 minutes. And if that's all right with everybody, I probably will run upwards of about 90 minutes today, because actually I just keep adding more slides to this presentation. So this is important, okay? Focus on being here, especially in the midst of some volatility, okay? Here's a little bit about me, just out of curiosity. There's quite a number of people on for kind of the middle of the day today, but for my own curiosity, how many people here are brand new, have no idea what a Theotrade or a Don Kaufman even is? Okay, just say yes, no, just a Y for yes, N for no. It's okay, people. Admitting it is the first step today. So by all means, okay, excellent. Okay, pretty good group here so far. Just making sure everybody sees that all right. All right. So with that, that's pretty good numbers in here. By the way, I appreciate that that you guys chatting in. I like groups that are a little bit interactive with us. That's why I do it during the live session. So a little bit about my background and how I got involved here. And I always start with this kind of saying, in very large part, what got me here and what got us, and I say us, there's a number of us involved in Theotrade, what it got us to actually build Theotrade is I watched order flow for 15 years, and that really brought me to you. And when people like hear that terminology, like I watched order flow, they don't really grasp kind of what that is. And I talk about like order flow and so forth, like almost like I expect everybody to understand, but I'll give you a little just a brief background on me, and then we'll jump right into this. So the first question I always get is, how did you get involved in this business? I grew up around traders. When I say I grew up around traders, I literally grew up around traders. My uncle was a market maker all the way back to the 1970s, but he wasn't just an individual that stood on a floor. He built a trading firm in Chicago. Anybody that's in the Chicago area will know the firm. It was called O'Connor and Associates. They sold it to the Swiss bank in 1992. It was a multi-billion-dollar deal, and it's a multi-billion-dollar deal all the way back in the early 1990s. But he started with one seat on the floor of the Chicago Board Options Exchange, and he built it to over 500 seats on exchanges worldwide. And I grew up, around it. And again, I have no idea when I learned to trade options. I literally grew up, hearing about, calls, puts, stock, even futures contracts when they came out. So again, I grew up around it. 3 weeks outside of college, I was invited to trade in Chicago, which I did. About 18 months thereafter, I was invited into a startup brokerage firm. So I knew some guys from the OEX pit in Chicago. The OEX is the S&P 100. And they said, you're a kid, you're young, what are you going to do with your life? And I was like, I don't know. They go, well, we're starting a firm. We're calling it Thinkorswim. We have no idea what this thing is going to be, but you're young. Okay. You're, obviously somebody that we're interested in because we're asking you, come, you'll run the education division of the company. I was like, sweet. I have no idea what I'm doing. So at the ripe old age of 24, I joined a company called Thinkorswim as lucky number 13 in terms of employees. I went on to actually build the entire education division of Thinkorswim. I was on the executive team when we took the company public in 2007. It was about a $600 billion deal. Short time thereafter, TD Ameritrade bought us for just shy of $1 billion. I went on with a 5-year non-compete clause with TD Ameritrade. So from about, 2009 to about early 2015, I ran the education of TD Ameritrade and their 7 million clients. All the meantime, we actually studied order flow of retail clients. And in effect, that's what you are. If you've ever had an account with Thinkorswim or TD Ameritrade, okay, a lot to obviously do with the platform at Thinkorswim, but we studied retail trades and we know everything about your order flow. If you give me a strategy like covered calls, we can actually give you the probability of people having made money. Did you ever do an iron condor? We could tell you if you made money. You name a strategy, and we had detailed data effectively on that. So after a 5-year non-compete passed, I sat out of the industry for a period of time, and we eventually opened up Theotrade to do this and to educate in an unlicensed kind of environment. And that's really what brought us, to building Theotrade. By the way, I also tell everybody, if you ever need to get a hold of me after today, okay, by all means, okay, we answer emails here. Just hit me right here. It's just Don Kaufman, support@theotrade.com. By the way, we use a general inbox, the support inbox, support@theotrade.com. Put Don in the heading. That email will get to me. So it's a little background on me. All right. This is actually crazy enough. It's the last time I was in Chicago. It's been a while since I've been alive. This is the longest period I've ever spent outside of the Chicago area. This is a CNBC appearance a couple of years back, but just one of the more memorable CNBC appearances. Let's get down to business. What are Ultima trades? Let's dive right into this and kind of keep this train moving. That and will keep me well caffeinated here. So at first glance, when people see like, Ultima trades, they kind of think ultimate, and that's actually not what it is. So I'm going to throw this out here right now. Ultima has to do, okay, with trading, and I'm going to explain exactly what Ultima is here momentarily, but it has nothing to do with, it's the ultimate trade. That's not the intention at all. So higher volatility, okay? Higher volatility has resulted in significantly more options premium, right? Which makes option prices higher. Now, okay, granted, I've actually talked about options already twice today. We are going to talk a little bit about options. Before anybody runs for the hills over here, when I say that we're going to mention a little about options, you need not have any options experience. That's fine. Put it aside for right now. But you're going to learn some interesting aspects. Whether you have ever traded an option or not, it's neither here nor there. But it's important, okay, that we have this discussion about options because there is a phenomenal edge that is opened up. And an edge, okay, is something we can display like mathematically, whereby, hey, if you do this trade again and again and again, we can produce positive expected returns. So higher volatility. So I mentioned higher volatility. These days you can't agree on much, but can you agree on one aspect? We've had higher volatility pretty much since the onset of COVID. I'm actually going to open up like a 3-year chart here. Since the onset of COVID, and where is the onset of COVID? Let's put it right there. Here's the onset of COVID here. We just spiked. But since the onset of COVID, volatility has remained relatively high. And you can see where we are right now, just about the 20 mark in the VIX. Speaking of which, how many people are familiar with the VIX? Anybody? Anybody? How many people are, again, Y for yes, N for no? If you're familiar with the VIX, fantastic. If you're not, just let me know. Okay. So the VIX is kind of like, I would say, my predecessor's indicator. I'm not a huge advocate of the VIX, but I think it's a wonderful way to display. All right, so we've had some higher volatility. And whenever the market's going through right now, things are getting a little crazy. I mean, on a day-to-day basis, we're up, we're down, we're all over the place. But the one aspect that I think a lot of people don't look at is that options implied volatility skew is also at historically high levels. Take a look, okay, at skew, which we're going to look at momentarily, and the volatility also remains at record highs. So we're going to look at skew. We're going to look at the volatility, because in effect, this is what Ultima is really about. So for those of you that are kind of curious, right, in options trading, okay, there's volatility, and in stock too, there's volatility. Okay, what helps describe volatility is something called VAMA. VAMA is the rate of change of volatility. So there's Vega, there's VAMA, okay, and then there's actually what they term Ultima. And what Ultima really means, it's the volatility of the volatility of the volatility. You got to love that. It's tertiary volatility. I know you really needed to know that. You want fries with that, but that's what Ultima means. And when we talk about Ultima trades, where edge lies right now in this marketplace is Ultima. And I'm going to show you just that. So the first thing, pricing in markets these days is wildly skewed. Okay, wildly skewed. And I'm just displaying over here like this is a normal distribution curve. This is skewed, right? So those are very far from normal. But what most people are not aware of is there's actually a symbol specifically for this. The symbol is SKEW. So you can bring it up on any trading application. You should be able to bring it up. In fact, here's a live trading application. Let's type in skew. See all the little dots? That's because skew is only calculated end of day. So all you have to do is come over here to style, change up the style, maybe go to area chart. Look, skew. Take a look at skew, like the last 10 years, phenomenally large. And again, this started to really pick up even after the onset of COVID. And you're like, well, okay, that's great, but what am I going to do with that? Like, what am I going to do with skew? That's what we're going to talk a little bit about. Okay, goes further than just skew, right? How can we use skew to our advantage? Skew provides edge in the sale of out of the money options. I'm going to say that again. Skew provides edge in the sale of out of the money options. In effect, what skew really is, okay? It's a distortion of option pricing that is measured on a day-to-day basis. There's actually firms that measure it in real time, but when I say a distortion, the puts are trading for a massive premium versus out of the money calls. And the higher the skew, okay, the more the effects of supply and demand kind of grip hold in the world. So push all that aside for a second. Again, I said the word options, I said the O word, all right? Again, some people are a little intimidated by the term options. As I said, we are going to discuss that to some extent today. And I level with everybody right now because what are we going to talk about? It's not just about options. It's about, again, definitively where to find edge in today's marketplace and how to go about doing this most effectively. So many traders, and how many newer traders do we have? Like how many people here honestly started trading in the last, I don't know, let's say 2 years. How many people really started trading like in the last 2 years? Anybody? We're getting a little bit more serious about it. All right. I know that we have some long time traders in here. Me. Okay. All right. I like that. Somebody said nope, last 20 years. See, even the experience, you guys will pick up a lot today. So quite a number of people said me. Started learning to trade in the last 2 years. In fact, there was an absolute onslaught of accounts opened at the onset of COVID. Like there was 1 month where like Robinhood, I think a lot of people have heard of Robinhood before, the brokerage firm. Definitely not touting it, but I think a lot of people have heard of Robinhood because it hit mainstream media every single day. Not only the number of accounts Robinhood opened, but some of the trades that were ultimately going through there. And the fact of the matter is, when you look at Robinhood, everybody that goes to Robinhood, if they trade options, they're buying options. How do I know that? Like, I sound so sure about that. You're buying options if you have an account at Robinhood. Generally speaking, you are, because that's all that Robinhood lets you do. So the buying of options by all of these new account holders, okay, has really tweaked pricing beneficial for premium sellers. So look at this. This is retail traders gone wild. By the way, I'm not cherry picking like a good day. I just wanted to show you something. Last year, I thought this number was high. This is October of 2020. We were doing about 29 million option contracts. This is yesterday. It's October 11th. And yesterday, we did 34 million contracts, which quite specifically was a very light day because the 2021 average has been more than 38 million. So yesterday was a light day. And the reason I'm pointing it out, yesterday was technically a bank holiday and we still did 34 million option contracts. Okay. And you go, so who cares? Like, do you realize that people are working from home right now and they're just sitting there and they're just trading throughout the course of the day? I know it, you know it, everybody's doing it. Okay, you could just look at the brokerage numbers, whether it's TD Ameritrade, which is bought by Charles Schwab, or E-Trade, which is now owned by Morgan Stanley. Like the hottest thing was all the brokerage firms got gobbled up simply because of the onset of COVID, and everybody realized people are going to work from home, they're going to trade from home, and options trading has absolutely exploded, like insane. So what are we going to talk about today? You're going to learn a little bit about selling options. So why? It's where edge lies. Okay, that's where you want to be. And I'm going to explain exactly again what that terminology means. Like many of you, though, have kind of heard through the grapevine that selling options is the way to make money. Let's not make that my terminology. How many people have actually heard that? Okay. And honestly, like can say like, hey, I have heard that selling options is a great way to make money. Okay. However, and there's a big however, if you've experimented with selling options, you're going to know, okay, in your heart of hearts and in your stomach, you're going to know full well that there is definitely risk involved. So what I'm planning to do in today's session, I'm going to separate the myths from the real risks, the fact from the fiction, and I'm going to discuss selling options premium in all of its glory in the most clean, okay, unique way to express to you precisely where you can also find edge. With that, if you're brand new to this, I'm telling you, do not panic. You can do this. So you may know nothing about options. That's okay for today's session. Okay. If you're brand new to this, just look to grasp big concepts like probability, risk. Again, if you're brand new, probability and risk are two huge kind of factions that I want you to kind of latch onto. If you're experienced, because somebody just came in here and said, I've been trading for 20 years. Okay, fantastic. If you're experienced in trading, you want to latch on to some of the finite details. And again, I developed this entire presentation, okay, to hit both ends of that spectrum. So we're going to dive right in, okay? One other just quick aspect worth a mention here, and you're going to hear me say this just, again, kind of incessantly today. Selling premium and selling options can now be done in incredibly small accounts. It's actually $2,000 accounts. You can effectively sell options premium. Do not, throughout the course of today's presentation, do not worry about margin. Okay, for the time being, push margin aside. There are brand new products, okay, that have hit the marketplace in just the last 2 years that really completely negate, not just reduce, but almost completely negate standard margin requirements. So we'll discuss that a little bit as well. Another quick aspect here, a couple of different facets of selling premium. So I use these terms because, again, as I said, I kind of grew up around option trading. As I said earlier, like people always ask me that question, who taught you options? I'm like, I don't know. When you grow up in a family that, I guess speaks a different language, you probably speak that language. So you can't really ask me like, oh, call or put. I mean, I remember being at like, Thanksgiving dinner table and people are like, oh man, my trade is so deep in the money. And they were talking about statistical arbitrage. I'm not joking. That would be like a Thanksgiving Day conversation, for the family. Until like one day I was actually like involved in it. And then I'm like, oh yeah, this kind of makes sense. So I don't know where I got started in this, but I sometimes talk about like selling premium and people have no idea what I'm talking about. Selling premium is selling options, but all of these terminology, like all the terminology on the screen right now could be used interchangeably. When you talk about selling premium, people go, I don't sell premium. I sell iron condors. I go, yeah, selling iron condors, selling premium, same animal. They go, no, 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 no. Me do credit spreads. I'm like, okay, that's the same thing. So you can sell premium, you could do credit spreads, you could do iron condors, you do short call spreads, short put spreads. All right, you could do delta neutral trading. Did you know that delta neutral trading, for most intents and purposes, form of actually sell side? You can do selling naked. That sounds exciting, but selling premium, it can be used to create both bullish and bearish positions. But again, for today, generally considered, most of these are actually going to be market neutral spreads. What that basically means is you're not going to see a lot of MACDs, not a lot of Fibonacci's, not a lot of Bollinger Bands. There's one bottom line right now. Do you find markets volatile? Just the last couple of weeks. And you go, yes, I do. Which direction of the market's going right now? I have no idea. Good. Now we're getting someplace. Because what we're going to look at today is selling premium. We're not necessarily, going to be inclined to look at market direction. Probability and profitability. Okay. All right. So your trading is based on probability, whether you like it or not. You go, no, it's not. It's based on a MACD. It's based on a Fibonacci. The Fibonacci people make you do this. Okay. Your trading, though, is always going to be based on probability, but you can't get led down the road of probability. Okay. Like it's like the end all be all. What I mean by that is, it's actually one of the reasons I put this particular slide together is I'm just emphatic about this. There's all these different websites that come with me. I am right 95% of the time. And I'm like, oh, are you kidding me? Okay, listen to me. I will guarantee you that you could train an actual monkey to be right 95% of the time. In options trading, probability alone does not make you profitable. You got to remember that. And I'm not trying to be facetious with that. You can be right 90 or 95% of the time. You could still lose money. So never allow someone to use probability to lure you that is going to be profitable. I'm going to say that again. Probability alone does not make you profitable. Always remember that markets are a trade-off. Markets have always been a series of trade-offs. Higher probability can equate, okay, to higher degrees of risk, right? People are confused by that, but you'll see what I'm talking about in a moment. You could be right 90% of the time. I could be right 90% of the time, and yet you can still do what? You can still lose money. So where can you find edge? Because that's what people are here for, right? Good, because that's what I'm about to show you. We're going to get into something a little bit more important now. So this is the first, okay? This is the first probability and premium selling example that I'm going to give you. From the onset of this example, okay, just don't focus, like, again, people get all focused on like, what's the risk? What's this? We're going to cover all of that. But in the onset, all I want to do right now is to get you understanding, all right, the concept. The concept is a very, very simple one in context. And again, if I'm looking away from the camera here, a little excuse me, because my little right on board is over here, cameras are over there, screens are everywhere. Okay, I finally got my my full trading setup here on the island. Took a long time to get a container shipped to this island here. So we're going to discover a little bit about probability and premium selling tactics. Okay. In the first example, this is a stock. This is a stock. Do we own the stock? No. What's the name of the stock? The name of the stock is like what I name every stock. The name of the stock is stock. What does that mean? It means stock. Okay. So stock is trading at 50. It doesn't matter what stock it is. So stock is trading right at 50. Do I own the stock? Do I want to own the stock? What am I going to do? I'm just going to trade options on it, right? What option am I going to trade? I'm going to come all the way out here, okay? And this first example, we're going to sell something. We're going to sell a 60 call. We're going to collect exactly $1. I'm going to put it down here just so you guys can see it. We're going to sell 60 call. We're going to sell it for exactly $1, and this is actually going to be a credit. Now, for those of you that are experienced, I am not going, okay, I'm not going to define my risk. I'm not going to do any of that. I just want you to think about the 60 call. And let's say that this 60 call, like all options, is good for a period of time. In this case, I'm going to make it good for a period of 1 month. Okay, time out. So I wrote something on the screen over there. And if you're brand new to options, you're like, I don't even know what a 60 call is. That's okay. Let's talk a little bit about it. So this is for the new people. And in a minute is going to be for the experienced people. Ready? For the newbies out there, 60 call. The cool thing about options is, as a trader in the options market, you can buy stuff and you can sell stuff. Buy, that means palms are facing me when I want to buy. Sell, palms are away from me. So you want to buy something, okay, or you want to sell something. The cool thing is, though, As a buyer, you have rights. As a seller, you have obligations. Let me explain you something. If you look at the 60 call, what's the 60 call? Now, let's not talk about selling options to begin with. Let's talk about buying options. A 60 call. If you went out there, okay, and you bought a 60 call, it would give you the right to buy the stock at 60. So you buy a 60 call, you'd have the right to buy the stock at 60. Why would you want to buy the stock at 60? Okay. Well, if you have the right to buy the stock at 60, could you buy the stock at 60? Think about that. The 60 call gives you the right to buy the stock at 60. How long is it good for? It's good for a month. It could be good for 2 months, 3 months, but this one's good for a month. So I go out there and I buy a 60 call. And the only reason I can think of, like, if I just never had owned the stock and I just went out there and I'm like, that's it, baby, I'm going to buy a 60 call, I must be like wildly bullish. That's the only real reason, right? I buy a 60 call. I don't own any stock. I buy a 60 call. I must think that that stock is going to rocket up. Okay. Could the stock go from 50 and shoot all the way to 60? Yeah, it could. But I wouldn't even make any money there because I bought the 60 call. Forget about selling it right now. I bought the 60 call. 60 call gives me the right to buy the stock at 60. What would you rather buy the stock at? Would you rather buy the stock at 60? Would you rather buy it at 60? You go, I'd rather buy it at 60. You go, wait a second, but I bought a 60 call. I paid $1 for it. So I don't even break even to $60 plus the dollar I paid, which is what? $61. So if you buy a 60 call, you don't need the stock at 60. You need the stock at 61 just to be able to break even. Realistically, you need that stock at like 65 to even make it interesting. So now what do you really need? I need a wing and a prayer. I need that stock to go up. I need it to go up big. I need it to go up fast. In the next month, it's got to rock to the upside. Right there. See that trade? That's what the Robinhood peoples are doing. There's nothing wrong with it. Okay. But the Robinhood traders are out there and they are swinging for the fences with every single position. And that crap, it worked until it doesn't. Right now, look at the market. It's not working anymore. Okay. So swinging for the fences. Now all they're doing is out there just what? It looks like they're taking a 9-iron and just making divots because that's all that's happening at this point in time. So if you look at this, they're going out there and they're buying the 60 call and they're paying $1 for it. Okay. Who sold them the 60 call? First of all, if you buy a 60 call, do you have the right to buy the stock at 60? You do. Let's actually give you a quick example. Let's say you buy the 60 call and the stock were to shoot all the way to 70. So if you have the right to buy the stock at 60, everybody else in the world has to pay 70. That call is going to be worth at least what? $10. It's going to be worth at least $10, right? Because you have the right to buy the stock 60. Everybody else in the world would have to buy the stock at 70. But back up for a second. Most of the time when you buy a 60 call, what happens to you? Nothing happens. The 60 call expires what? Worthless. And your little dollar lottery ticket, okay? That dollar must go to somebody else, not going to you, okay? So we're going to look at the dark side of this, okay? We're going to look at the dark side of this. And the dark side of this is a very simple one, okay? Hey, what happens if we go out there and we sell the 60 call? What do I call it? The dark side? Because selling premium is like mysterious to a lot of people. It really is. When I say it's like mysterious, like legitimately, like it's mysterious to a lot of people. In terms of, I'm trying to write here at the same time as this. Okay. It is mysterious. So I go out there and I sell a 60 call. Let's assume now we're going to sell a 60 call. And you go, wait a second, Don. Okay. We're going to delete all that off there for a second. And I just want to delete one portion of it. We're going to go out there. We're going to sell the 60 call. And you go, wait, Don, I never owned the 60 call. I get it. You're selling a 60 call that you never owned. Do I own the stock? No. In this example, you don't own any stock. So how can you sell a 60 call? You're selling yourself into a definitive obligation. And again, we're just going to assume right now that you're selling it naked, but we're going to look at this from a probability point of view first. Then we're going to look at it from a profitability point of view. Okay. So I go out there and I sell a 60 call and I go, wait a second, how do I sell a 60 call? I never owned it. You're selling yourself into an obligation. What kind of an obligation? Well, if you were to buy the 60 call, you have the right to buy the stock at 60, but you didn't buy it, you sold it. So if you don't have the right to buy the stock at 60, you must have what? An obligation to give somebody else your stock at 60. You go, I don't own any stock. You're exactly right. You're going to sell a 60 call, but you're obligated to give somebody stock at 60. And if you don't own any stock, it could be a problem. Let's discuss that a little bit here. So I'm going to go out there. Okay. I'm going to go out there and I'm going to sell a 60 call. And for that 60 call, I collect $1. Now, what can happen to this stock? The stock, which I do not own, can stay flat. If the stock stays flat, what happens to me? You guys tell me. Anybody? Anybody? Okay. You sold a 60 call, stock stays flat, you keep the dollar. Okay. You sell a 60 call, stock goes down anywhere to the downside. What do you get to keep? You get to keep $1. Okay. Okay. So if the stock stays flat, I keep the buck. If the stock goes down, I keep the buck. Even if the stock goes up, if the stock goes to 55, what do? You get to keep the dollar. If the stock goes to 57, what do? You wet yourself, but you get to keep $1. If the stock goes to 60, you're like, but still my heart. Okay, you can't take the pressure anymore, but you still get to keep the dollar. And if the stock goes to 70, what happens? Somebody says, I call the right to buy the stock at 60. You go, wait a second. I don't even own any stock. So you're going to have to go out there and buy the stock at 70 to give somebody stock at 60. What are you going to lose? You're going to lose $10, but you collected $1 up front. So you could actually lose like $9 in this trade. You could lose as much as $9, but back up for a second. Okay. Back up for a second. What we're going to look at, and we're going to be very, very definitive about this, is first, we're going to look at probability. We're going to talk about the risk management side of it here momentarily, but we're going to look at probability. From a pure probability point of view, do you get it? What I mean by that is if the stock stays flat, you make money. If the stock goes down, you make money. Even if the stock goes up considerably, you make money. This kind of trade is going to have upwards of like a 90% probability, maybe even as much as a 95% probability of making the dollar. But again, don't let that 95% fool you. There's a dark side to this. And the dark side is, what if the stock goes to 100? You go, oh, I'm finished. Because the stock can go to 100, okay, you're going to lose $40, but I collected $1. Okay, so you can't just get lured down the path of this is going to be the greatest trade ever. Now, okay, everybody okay at this point? Because now we're going to get a little bit crazier. For the first time, we're actually going to deviate. We're going to go to a live trading application. So this trading application happens to be Thinkorswim. I use Thinkorswim and interchangeably now with Tastyworks. I use both of them. Tastyworks is kind of like the up and coming firm right now. There's no question about it. Tastyworks, by the way, was just acquired by a company out of Europe, IG, for $1 billion. And this is the founders of Thinkorswim that I worked with for a long time. So kind of use the platforms kind of interchangeably. Anyway, I'm going to go to an example. I'm going to use Twitter in this example, and I'll just close up this little left side bar. We'll go some little further out in time. Let's get crazy. I'm just going to pick an option, okay, that's way out of the money. Here, these little monkeys right here. Okay, that little monkey right there. It's trading for about 70 cents. And all you're looking at on the screen right now, and again, if you've never looked at a live option chain, okay, if you've never looked at a live option chain, this can be a little scary, but here's an option. This is what we term an 80 call. And the 80 call is trading for 70 cents. So it's trading for 70 cents. Don't even worry about the time frame. We'll talk about time frame again in a minute. So the question is, if I went out there and I sell that 80 call right now for 70 cents, what's the most I can possibly make? 70 cents. If you sell something for 70 cents, the most you can make is 70 cents. Okay. How much risk do I have? And the answer is a lot. What's the probability in the trade? Okay. And when it comes to probability, like there's calculations for this. You just click. By the way, every trading application has this, whether you're on Thinkorswim, you're on Tastyworks, or they're on E-Trade. I mean, every trading application now is built around probability. The cool thing is I can honestly say this, like this was cutting edge when we built Thinkorswim. When we built Thinkorswim and we threw probabilities into the platform, we were laughing. We're like, nobody ever saw this coming. But options have always been based on probability. Trading's based on probability. So anyway, if you sell here in Twitter, and Twitter's a $62 stock, if you sell this option, look at that. You have a 91% chance of making 70 cents. It's pretty cool, isn't it? All right, takes 2 seconds. As I said, you know, and I wasn't trying to be facetious earlier. Okay, it was kind of like, you know, fun to take people through this. When I was saying I wasn't being facetious, like you could legitimately like train somebody that quick to find an option with a 90% probability. And that's why I can't stand. There's like all these websites that are like, come with me. We have a 95% track record, and I'm like, oh. I'm just going to send them like a little chimpanzee and dressed up in a Theotrade shirt and say, hey, the monkey can be right 95% of the time. It's true. Okay. So again, from this perspective, right now, all we're worried about is, okay, we're keying into like 90% probability trades. Okay. Now we're going to start taking it up a notch, right? When you sell options, it equals positive decay. All right. Now, selling options every day that passes sees the dwindling of an options premium. Okay. It's like an ice cube that melts. And okay, again, in my mind, no matter how long I've been around option trading, it's probably because I learned this from a very early age. But in my mind, option premium, specifically decay, is like pouring water on the Wicked Witch. I'm shrinking. Okay. She was more or less burning, but that's a whole different story. Um, anyway, most of you that are experienced, now I'm really going to come after those that are experienced. The experienced traders in here, I'm going to blow your mind right now. So everybody here is kind of familiar with decay graphs. Like when you sell an option, it decays and it decays exponentially, right? So as time passes, the options you sell will decay exponentially. Let's take a moment to review options, time decay, yada, yada, yada. Almost everybody in here has seen a decay graph, okay? What you haven't seen though is the reality, okay? Here's the reality, and this is the part that really, okay, this is gonna drive a lot of people crazy. Most people that teach options, they don't understand one very interesting little facet here, and that's this. This decay graph isn't necessarily accurate. How is this decay graph not accurate? This is what we term, all right, near money options. And you're like, wait, what? That's the decay graph of something that would be like an at the money option, meaning that if the stock was trading at 50 bucks, it would be like a 50 call, and the 50 call would decay like that. Okay. And I think most people are familiar with decay in respect to how does decay work? Works like this, right? You go out there and you buy a 50 call and you pay, I don't know, let's say 330 for that. Okay. Let me make this a little bit cleaner. I'm gonna clean things up for you here. We're gonna go out for a 50 call and we're gonna buy it and we're gonna pay like 330 for it. And we pay 330. And then like a few days passes, and that option, okay, is still worth $3. So right over here, you paid 330 for it. And it's worth like $3. By the way, how many people here have ever gone out and bought an option? Almost everybody has. Everybody, including me. I buy options from time to time. Okay, you think I haven't experienced this? Everybody has experienced this that's ever traded options. So you buy an option for 330. Why'd you buy that call option? Because you thought the stock was going up, and the stock doesn't go up. The stock stays flat. So your $3.30 option is now worth $3. And your first instinct is not like, I'm wrong. Nobody ever thinks that they're wrong. Okay. Your first instinct, when the option goes from 330 to $3, you go, I'm all right. I'm all right. And I'm like, oh boy, you're not all right if you're telling yourself you're all right. I'm gonna be okay. I'm gonna be okay. Anyway, your your 330 option drops to 3. And then all of a sudden you start to get really nervous because that option, all right, that option starts to decay a little bit more rapidly. It goes down to $2.50. So all of a sudden you're like 330, $3, 250. At 250, you're like, oh, I'm okay. I'm okay. I'm a little nervous now. And then all of a sudden the option just gets slaughtered. And it's worth like now it's worth like $1.20. And at that point, you're like, oh crap, I'm just gonna hold it for the hell of it. Okay. Before you know it, your option's literally worth 30 cents and then it goes out zero. Has anybody lived that one? Come on, people. Okay. This is trading. Admitting it is the first step today, right? This is confessions of a trader. All right. Everybody has. If you've never experienced this, you just haven't traded options, which is okay. I just want everybody to understand when you buy options, that's how it decays. You're like, oh, I'm shrinking. But again, the first instinct is, I'm okay. I'm okay. I always tell this to people, whatever you've done in your account, I've watched you do it in your account. I worked at Thinkorswim from 2001 when we actually launched the platform. I was there before we even launched the platform from 2001 until February of 2015. I could see everything you did and I studied everything that you did. So every single I guess psychological glimmer of hope that you've ever been through, I've seen it all before. Like you're not going to tell me anything like, that surprised me. Like, I confess, this is confessions of a trader. Don't worry, there's a 12-step program later. So the crazy part of this decay graph is that is a decay graph, again, of a near money option. Remember this for a second, because I'm going to blow your mind with something here that is overlooked even by really experienced traders. Options decay at the square root of time, yada, yada. Okay. Now we're going to do a little bit more of a, I think, up-tempo example here. And this up-tempo example, now we're going to pick a $100 stock. And this is, again, this is the kind of the a little bit more realistic. And we're going to go out there with this $100 stock and we're going to sell, okay, a 120 call. And that 120 call is going to be trading, once again, we're just going to make it $1 credit, right? So here's a 120 call, okay, going for $1 credit. Now, okay, I'm going to make this option, ready? 3 months out in time. That option is going to be 3 months out in time. I know that that was absolutely hideous. My my writing over here is just hideous, but 3 months out in time. Time out. Why would I ever want to sell anything 3 months out in time? Okay, why? Why? So first and foremost, we have a stock in this example. The stock's trading at 100. Do I own the stock? Absolutely, unequivocally not. I do not own the stock. So the stock is trading at 100. I've had nothing to do with the stock. I don't own the stock. I don't want to own the stock. I never want to own the stock. All I've gone out and done in this example is I've sold a call. Do I want to sell a call? Not necessarily. I'm just using the call in this example because I think it's a lot easier for you as a trader to kind of be able to, grasp. I think it's just easier to grasp when I sell a call. So I'm going out there and I'm selling a $20 out of the money call, which means this: there is 20 bucks separating me from the market. The market is this $100 stock. I can see the $100 stock way down there. It's really, really far away from me, but I sell this for $1. This stock has to legitimately rally by what? By 20% to really threaten me. Do you feel threatened? Okay. Yes, sir. I feel very threatened. But here's the reality. I'm $20 out of the money. So from a probability point of view, this thing is gold, Jerry, gold. Okay. What can go horrifically wrong? First of all, you have to sit there and you have to wait for 3 months. No, you don't. We'll get to that point in a minute. So you're like, oh man, 3 months? I thought this guy was going to tell me how to make money every like 30 days. I will, and I am. But we have to actually go through this very painful example to get to that point. So I sell a 120 call, and I collect $1. By the way, if you sell something for $1, what's the most you can make? You're going to only make $1. You can't make more than $1. If you sell a car for 20,000 bucks, nobody comes back a week later and goes, that was a hell of a car you sold me. Here's an extra $5,000. Okay. You sell something for $1, most you can make is $1. What can happen to the stock? Stock can stay flat. You make money. Stock can go down. You make money. Stock comes soaring to 110. Even 10% move up is big. Stock come all the way up to 115. Okay. You're still making your $1. Stock has to go up legitimately 20% for you to start to do what? To lose money. Okay. Why aren't you doing this right now? And I love this example because somebody says, I never sell naked calls. You might want to learn to do that. You're going to be blown away by what we're going to talk about here in a second. I never sell naked calls. Really? Depends on what product you sell naked in. So what's the probability of making money in here? Probably upwards of 95%. Okay. Blank the screen for a second. Blank the screen. Why do I sell options so far out in time? Maybe you noticed in my example, I sold options literally 3 months out in duration. Typically, traders sell shorter dated options. But that's why you're actually tuned into today's webcast and why we're going to talk about specific criteria, because criteria is what we do here at Theotrade. Listen to me right now. Anybody can come in here and say, you should sell options. Okay. We're actually going to show you exactly what Ultima is right now. There has been a major shift, okay, in what works in markets, a major shift. And this is what Ultima really breaks down to. When I say Ultima, it's the volatility, okay? But a lot of people are missing. Let's close up Twitter. Forget Twitter. I don't need no stinking Twitter. Let's go to the marquee of all marquee products. Let's go to the spiders. Just out of curiosity, how many people here are familiar with spiders? Just by, quick show of hands, a yes or no, okay, maybe so. The spiders are probably the most prolific product ever in this business. What is a spider? It's the S&P 500 ETF. It's like a stock, but it's just a big mush. It's a conglomerate of the entire S&P 500 is one. I say it's the most prolific product. You realize that today, it's just kind of chill day, right? It's already traded 2.6 million contracts. That thing is going to be good for usually it does about 4 million contracts in a day. 4 million contracts just in that product. How many contracts traded in the whole market yesterday? Huh? Come on. Do you remember? How many contracts traded in the entire marketplace yesterday? Okay. It's on the test, man. It's 34 million. 34 million contracts traded total yesterday. You know that 4 million of them alone came from the spiders? It's pretty crazy that one product is trading more than what? Oh, it's trading about 12% of the volume, and then the SPX trades another million contracts, and it's crazy. So now we're going to go into the spiders. Okay. And inside of the spiders, being the most prolific product, I'm going to take you all the way to January. Why am I taking you to January? Just because I love to torture you. And I'm going to find an option that's right around $1. Okay. Is it the right option? I don't know. It's just trading around $1. Here, perfect. Couldn't be any better. We have an option that is trading at $1. Okay. When I say at $1, it's 98 cents at $1. Okay. Look at the probability, 93%. Okay. Here's my example. Right? You guys you're gonna love this one. I love this one. I love when an option trading perfectly at $1. I could not have lined this up any better. Normally this takes skill. In this case, it just takes an option trading for $1. We're gonna go out and we're gonna sell this. We're gonna, and again, when I say line this up, what am I gonna do? We're gonna sell, in this case, the January, okay, it's gonna be a January 477 call, and we're going to sell it for exactly $1. Ta-da! The trade is now done. The applause are going wild because as soon as I sell it, everybody thinks to themselves, like, are you crazy, man? You're going to have to wait 101 days to make your buck. Like, that's ridiculous. If you do one contract, first of all, the margin's going to be huge. I told you not to worry about margin. Margin, push it aside. Okay. After 15 years in the brokerage business, don't you think we've actually figured out how to circumnavigate margin, circumnavigate day trading margin rule? If you've ever hated the day trading margin rule, okay, just give me an amen because I'm right there with you. Day trading margin rule is ridiculous. Okay. You can circumnavigate that like that. But margin is even more ridiculous. And we could circumnavigate margin. I'm going to go out there and I'm going to sell the January 477 call, and I'm going to sell it for $1. Okay. Now I'm going to do nothing. I'm just going to take the assumption for this first example that the market just oscillates back and forth, back and forth, back and forth. What's this trade going to be worth about 30 days from now? How can we figure that out? The 101-day option, okay, a month from now is going to be worth what the December options you're trading for right now. Does that make sense to everybody? Like the way to figure out what is a January option going to be worth? In this case, it's 101 days to 66 days, exactly 35 days from now. So it's a 101-day option. Fast forward to the December options, we're going to look at a 477 call in December. Why? What can I make? What can I make? I don't want to hold this position. What I'm getting at here is I don't want to sell something for January and then sit there and they go, oh, I'll see 101 days from now, because that's insane. As I said, when I started this presentation, I want to make money every 30 days. I just want to knock out, a little bunt, make money, a little bunt, make money, a little bunt, make money. That's what this business is about. Okay. Just go out there, pick up a couple nickels and dimes. In this particular case, pick up 50, 60%. Okay. On a percentage basis, what can you make? Because I told you earlier today, all right? I told you guys earlier today that probability alone doesn't mean squat. It's about profitability. How profitable can I be in 35 days? Here's the answer. Go to the 477 calls. 477 calls. What are they trading for? Exactly 35 days from now, they're trading for 35 cents. So what do? 35 days from now, you're going to turn around. You're going to buy your Jan 477 call back, and you're going to pay 35 cents. What'd you make on it? 65 cents, or 65% inside of what? 35 days. So why is everybody telling you to sell short duration option premium if there's awesome returns out here? Because most people don't understand, okay? There is some complexity to Ultima. The complexity is knowing exactly what options to sell. How far out of the money do I go? You realize I'm all the way at the 477. This market is at 434. Even if the trade went horrifically wrong, what's the market going to do? It's the spiders. The spiders are not going to like jump from 430 to 470 overnight. Even if world peace breaks out, okay, they start just throwing dollar bills out to everybody, it's still not going to jump that far. You got to understand, we're going to look at this in quite some detail, but you can make 60, 65%, okay, in 35 days. You want to see something even crazier on here? Look, okay, check this out. This is 21 days into the future. 21 days into the future, you can make almost 50%. In 20 days, you can make 50%. Now that's just chaos. It's crazy. I'm even going to show you another one. I did a session last week. And in last week, I literally sold these two options. Okay. It's last week. Okay. Let's go look at my physical inventory. When I say physical inventory, I am looking exactly back to last week. In fact, I like to do what I kind of call the full Monty on here. You get to see everything I've done. Here, delete this out. Okay. Here's the options that I sold. When did I sell them? Precisely a week ago. I did it. Okay. On a webinar here. Here you go. I sold the 480 calls and I sold the 481 calls. I sold them for $1.04 and 97 cents respectively. Okay. What are they trading for now? Here you go. I'm going to tell you exactly what I'm up. A lot of trades in here, but I'm up 24% and 25%. What have I done over the last week? Absolutely nothing. What did the market do? The market hasn't really gone up. It hasn't really gone down. Look at the marketplace in the last week. I know everybody's thinking to themselves, the market rallied, the market sold off. Really? Because I put the trade on 10.5 and the market's slightly higher. I sold calls. If the market goes higher, I should lose money. But I didn't. I actually made some 25%. Okay. You got to learn how to do this stuff. You got to learn how to do it right. I'm telling you, this is what we do here at Theotrade. Again, we went this far out in time because what people are missing is the decay rate of options way out in time that are super far out of the money. The decay rate is screaming fast right now. Okay. Selling short dated options. And again, I really want to hammer this. Selling short stuff like 13 days out, it's a mission in futility. Okay. You can't sell here. You can't sell here. You can't sell here. You can't sell here. You're going to sell options. Okay. You're going to have to give yourself some time because volatility is the key today. It's not about decay. It's about volatility. And it's about the shift of volatility. Again, this is what Ultima amounts to. I'm selling far out in time because that's what the criteria is here for. And criteria is what we do here at Theotrade. Now, let's get down to the hedging side of it. I don't want you to learn to just go out there and blindly sell options. Okay? I got it. Because this is where everybody goes, but what happens if there's a huge rally? I get it. There's a 90, I just showed you a 90, 95% probability trade. But you got to worry about the 10% hammer. 90% sounds great, but what happens 10% of the time when the market just rips your face right off? If you've never heard that terminology of rip your face off, then you have not traded long enough. Okay. When you trade high probability strategies and you're wrong, you get hammered. And that's why it's like literally like, a 20-pound sledge. I'll give you a little synopsis here for those of you that have actually sold premium. How many people here have ever sold an iron condor? Anybody sold iron condors? Because the iron condor sellers will really appreciate this. Okay. All right. Not too many people. A couple of people have done iron condors. I'll explain what an iron condor is. And I'm going to give you the whole life of the iron condor. And again, this is specifically, okay, from the experience of, 15 years in the brokerage side of the business, but 23 years as a trader. What an iron condor is. An iron condor is selling an out of the money call and it's selling an out of the money put way out of the money. So you sell a call and sell a put. Then what do you have happen? You hope we stay in the middle, but you're afraid if we move big in either direction, you could get destroyed. So you sell a call, sell a put, and you buy a call, buy a put. The risk graph looks like this. I don't know if you can see me in the camera. The risk graph looks like this. So you have this huge area that you can make money in, and then you define your risk. And what everybody does with the iron condor, I'm going to give you, okay, this is what I call the life of the iron condor trader. So you went to a seminar maybe 5, 6, 10 years ago, and they taught you how to do an iron condor. Maybe it didn't last 18 months. So you learn to do this trade called an iron condor. And an iron condor is a very high probability trade. Generally speaking, people do them 90%. So you go out there, and the first time you do an iron condor, it's in a product called the spiders. And you go, I'm Captain One Lot. And you sell an iron condor in the spiders. And holy crap, in month number 1, it works. You actually are like, oh, look at that. I made money. That's not happened before. So you actually are so shocked that you've made money. What do? You go out there in month number 2, and literally you tee it up for 1 month, pop. And month number 2, bam, you hit it again. You made money. Of course you made money. It's a 90% probability trade. In month number 3, you're already starting to get, a little cocky, squawking your feathers and so forth. And now you're not doing a 1 lot in the spiders. Now you're doing 5 contracts in the spiders. Okay, month number 3, you still make money. By month number 4, you're thinking like, holy crap, look out, Buffett, here I come. And in month number 4, you stop trading the spiders. You actually move to the SPX. Now, if you don't know the SPX is the most evil product of all. It is the mother of all products, sometimes lovingly called the widow maker. So you move into the SPX and you do a 1 contract trade in the SPX. By the way, 1 contract in the SPX is the same as 10 contracts in the spiders. And guess what? In month number 4, it lets you make money again. In month number 5, you do 10 contracts in the SPX. And the SPX is just evil enough. It's like, come on, more contracts, come on. And the moment you route that 10 contract trade, I got one. Train wreck. And what'll ultimately happen to you is not only will you lose everything that you made in the previous 4 months of trade, but you'll lose it and 50% of your account. Okay. And you just like, I did something wrong. I feel wrong. It was my contract. Listen, your losses exceed your gains for the previous 4 or 5 months. And people always say, they're like, holy crap, man, who's this guy? Can he see my freaking account? Yeah, I can. And I did for 15 years. That's all I did. I just looked at people's accounts. But when I say I looked at your account, like I didn't go into the account and be like, hey, Mike, you really suck at this. That's not what I did. We actually used big data. We had pretty much an entire group of actuaries at TD Ameritrade, and we asked them questions. We say, go into the data set and find everybody that's done an iron condor in the SPX. Tell me the probability of success over, X period of time. And we found that the life of the iron condor trader inside of the SPX, okay, their livelihood was less than 18 months. So we're like, okay, let's not teach them that. Okay, what happens if they did this trade in the spiders? They go, oh, well, the livelihood in the spiders is only like 13 months. Like, okay, let's definitely not do that. Okay, you got to understand something. Every nuance, every if, and, or, but, what can happen to you in this business, we've seen it before. Okay, you have to understand. You go out there, okay, you go out there and you sell premium like that without any way to define your risk, and you're just a sitting duck. All right, you increase contract size and you hit the train wreck. But then after hitting the train wreck and losing 50% of your account, by the way, I like what somebody said, and putting my tail between my legs. Has anybody ever experienced that? Has anybody experienced the livelihood of an iron condor? Did it take you full 18 months to figure it out? Okay, because after you experience the iron condor and you take that hideous loss, by the way, every single one of you, if you've ever done an iron condor, takes a hideous loss. After you've done that, then you come in here and you go, I can fix it. So you go back to another seminar and they teach you how to fix the trade. They go, oh, we're going to morph the trade. We're going to do this. We're going to do that. We're going to do a little dance, make a little love, get down tonight. Fix is a really, really dirty word in trading. Okay, I'm totally a cynic when people try to fix trades. They go, it's not fixing a trade. I'm morphing it. Okay, so you're taking an amalgamation of crap and throwing more good money into a bad trade. Is that what you're telling me? Okay, you're like, no, it's not more good money into a bad trade. Listen, the very notion of fixing a trade, okay, is taking more risk. There is no way, and I say this without an equivocation, there is no way to fix a trade, morph a trade without adding more risk. It's impossible. It's more risk and it's more transaction costs. Oh, I know. I trade with Robinhood. There are no transaction costs. Some fixes work. The very notion of fixing a trade, just you're taking out a shovel and just keep digging more good capital after bad. Okay. You got to throw bad trades out like yesterday's trash. And I think that this is the greatest analogy that I've actually come up with over the years. But the analogy is simply you have this car and you take the car and you just drive it off the cliff, preferably you not in it. You take a car and you drive it off the cliff and you go fish the car back out and you bring it to a body shop. And at the body shop, they look at this car and they go, that's a nice piece of garbage. What do you want me to do with that? And they go, well, sir, I would like you to fix the car that went off the cliff. And they go, why? It's totaled. Would you here? I can fix the car. You paid 50,000 for the car. It'll cost you 60,000 to fix it. Does that make sense to you? And they go, no, I guess not. Well, it's the same thing about your trade. You got to learn to do this right. You got to learn correct position structuring, okay, and position placement. What we're going to do right now is we're going to give you a little bit of like the full Monty, some of the full picture of how not, okay, to get killed when positions go against you, but more importantly and more appropriately, how to actually build a position that sells options, not how to build individual trades. Okay, so the first thing we're going to do is we're going to use the spiders. And again, if you missed the spiders a moment ago, the spiders, okay, you know what? And spiders are basically flat on the day. By the way, if anybody wants, you can come out here, and I've sold a couple of options in here, but you can come out here in the spiders and look, this option's trading for right around $1. It's 99 cents at $1.01. Okay, look, I'll work this right at $1, right in between the price. 99 cents at $1.01, work it at $1, work it, fire at will. So if they don't fill me immediately, they have to represent me. There they are. They're representing me now to the crowd, meaning that if they don't fill me instantaneously, my trade would actually go to the front of the queue in options. There I am. I'm on the New York Stock Exchange, my account number sitting out there. All right. Captain One Lot rides again. So my one lot is in line. I'm next to be filled. If there's a little bit of an uptick in here, we go up like another 2 pennies in the spiders, they will fill this trade. You just wait and see. Okay. So close that up. We're going to teach you selling options premium. And I'm going to do this as if I were trading specifically in a $434 product, because I would do this in this product. You can see me doing it in this product. All right, here we go. So right now, okay, the SPY is at, we'll call it 435. So the spiders are at 435. I'm actually going to clean that up a little bit so you guys can see it. I apologize. My pen is all kinds of crazy right now. Here we go. So the SPY, once again, SPY's at 435. We're going to go out and we're going to sell some options. Okay, what are we going to sell? Well, just a moment ago, you saw me actually tee up a trade. And the trade that I teed up and apparently just filled was a 477 call. Okay, what timing was awesome in that one, by the way. When I say I filled it, yeah, there you go. See, filled, New York Stock Exchange, 477 call. So I'm going to start with that one. I'm going to add this into the position. Okay, when I say I add it to the position, we're going to come in here right here, and we're going to say sold. We're going to sell 477 call. Okay. Before you go any further, then we're going to come way out of the money. And I'm also going to sell, in this case, a 335 put. That's going to be trading for as much as $2. This one I just sold for literally $1. The puts, though, the puts are going to be trading for about $2. Okay. Time out. What's the problem with this picture in here? Now I'm serious about this, not trying to be facetious. What's the problem with this picture? Anybody? Problem with the picture? It's the spiders. And I realize it's the spiders. And it's a marquee product. Could the spiders rally huge? Of course they could. And if they rally huge, could I start taking some serious pressure if they start rallying huge? Absolutely. I could start taking some serious losses. on the flip side of this, what happens if the marketplace were to start to crash? I mean, the thing that really would keep me up at night, and I've woken up in the middle of the night, market's down massive in the middle of the night. Futures are down big. You're like, man, there's no coming back from this one. This thing is going to get serious in a hurry. You'd have no time to react to the sale of these puts. These puts could open up at $20. One thing you have to learn in position structure, if you really want to learn to sell options premium, okay, you have to learn to build a position, okay? Enter what we term the hedges, okay? These are going to be risk controls, and there's 3 of them. 1, 2, 3. The first one, RTS spread. That actually stands for risk twist. This is a risk twist spread. Number 2, a VVS. The VVS is actually what we term a VIX vol spread. Number 3 is called a gamma iron. Timeout. Before I've ever even placed a position, before I've gone out, sold a call up here, sold a put up down here, okay? I have to have a risk mitigation tool in place. And inevitably, everybody asks me, well, what's that going to cost, man? It's going to eat into the profits of me selling options. Listen, you can't sell options in the first place without a risk mitigation tool in place. Okay, you can't. What do you think you're going to be doing? You think you're going to be faster than the market? You think that eventually you're going to wake up one day and the market's going to have crashed and burned, and there's nothing you're going to do about it. And if you've been in this business long enough, you've already experienced that. Okay, and I'm going to tell you right now, you have experienced that if you've been in this market. If you didn't see the COVID crash, I mean, like the COVID crash is incredible. The markets are down, 20% like that overnight. Every day was another limit down events, 5% overnight. The markets were all locked up. It was crazy. We're going to put risk mitigation in play. And what risk mitigation is going to do, okay, it's going to save your proverbial behind in the event of a major move up or down. I am not in this business to sell an option for $1 here and sell an option for $2 here. What we intend on doing, okay, we'll go out there and we're going to sell, for instance, some 485 calls, right? Maybe the market sells off and then I'm turning around and selling, right? Some 470 calls. Before you know it, probably sell, okay, some 320 puts, right? On top of it, I'll probably also sell, okay, something like the 350 puts, just depending on we've rallied or sold off. Now imagine, now I've got what, 5 or 6 positions on. Why do I have 5 or 6 positions on? Spread out some of my risk. It seems like a lot, okay, but this is done over weeks. So you don't have that much to monitor. You're just going to look at a handful of trades. And those trades are so far out of the money. 95% of the time, those trades, they're going to make you money. They're going to leave you alone. 95% of the time, those trades are going to make money. They're going to leave you alone. Okay. But in the event of a major move higher or lower, let's talk about the lower. Let's say we're trading right here. In fact, I'm even going to change the color so you can see this. Okay. We're trading right here at 435. The marketplace really takes to the downside. You have in place what is termed, okay, a VIX volatility spread. Now, for those of you that do not know the VIX, okay, and its capacity, what is the VIX? The VIX is the S&P 500 volatility index. You probably know this. If the market goes down, the VIX goes where? Exploding up. We're going to buy, okay, a very inexpensive hedge, because if this market goes down, that little VIX spread is going to explode in value, and it's actually going to act, right, as almost an umbrella shielding us from the incredible downside risk of the spiders. So we have this tiny little VIX volatility spread way out here, to the point where you're like, man, I can't even see it. It's way out there. You know what? The market starts to tank, and that tiny little spread that you paid next to nothing for explodes in value. at the bare minimum, that little spread gave you more than enough. Be like, woo, that got me through a rough time, baby. Okay. And you exit the trades and you don't get your head handed to you. You have to realize that you're making money in this business 95+% of the time. All you need to do to see positive expected returns is mitigate the risk in the event of a crash. But now you're saying, well, okay, what about if we rally huge? Okay, what if we do rally huge? Let's say we do rally up huge. That's where the gamma iron comes in. A gamma iron is actually what we term an inside iron condor. If we rally huge, we have to pass through the gamma iron before we can ever get to your short strike calls, meaning that you got to pass through a profitable trade to ever come close to you taking a loss. This will cost you a negligible amount in the near term, more than financed by selling options premium in the environment that we're currently in. I'm telling you right now, people, this is what you have to learn. You have got to learn to sell options premium and to do it the right way. This is why you want to sell options premium. Premium can be sold in a small account, even under $5,000. Okay, actually, you can have $2,000 in your account. Even since I put this slide deck together, you have to, by the way, you can do this inside of a retirement account. Okay, you can literally sell options premium now in a retirement account, even naked if you want. You go, my brokerage firm doesn't allow that, but you can. You can absolutely do this in a retirement account. It produces positive theta decay. You can even use it to enhance existing positions, provides an incredibly high probability of success. You never need to buy or sell the stock. Okay. And you can be wrong on market direction and still produce profitable trades. I just showed you that a moment ago. When I say I was wrong on market direction, okay. Well, when was I wrong on market direction? I was looking at my account a moment ago. All right. I'm looking at my account and I'm like, oh, and those spider trades. Okay. I was dead wrong on market direction. Here, I'll bring up the spiders again. I was dead wrong on market direction. I'm still up 22% in these trades. Okay. Why are you not doing this right now? I'm going to tell you right now, you need this in your life. Because if you look back at just the last couple of weeks in the marketplace, or you want to put it in a few months, here we go. Let's go right to the spiders. This is a 9-month chart. Okay. It does appear that the spiders are a little bit of a downtrend right now. Listen, I'm not one who's going to sit here and forecast. Maybe they peak to all-time highs again. Maybe they don't. Maybe they never come back to the all-time high. Maybe it's pretty anticlimactic. The spiders finished the high at 454. I don't know. There's one thing I know. There's a lot more volatility on the way. That's one that you could say without unequivocation. And that's why I'm telling you right now, people, you need this in your life. Okay? Because moving forward, there's a phrase that we've been using here at Theotrade, a consistent amount. And I'll share it with you, okay? One of the reasons that we're so heavily into selling premium right now, it's like all that we're really talking about is there's one aspect that we see very, very clearly, okay? The Fed's going to do what they're going to do. They're going to start tapering. The Fed's going to start tapering. Okay. Well, somebody says, well, maybe they're not going to taper. They're just threatening to taper. Okay. But they're not going to turn more monetary policy on, right? Then we have to talk about all the different bills. Okay, that's monetary policy. I'm talking about fiscal policy. Fiscal policy, there's $3.5 trillion bills and $1 trillion bills being thrown out left and right. The phrase we've been using here since pretty much early summer, it's as good as it gets. Okay, in terms of fiscal policy, in terms of monetary policy, this is as good as it gets. Inflation right now, just breathing down your neck. Doesn't matter whether you argue that or not. Look at the energy markets. They're exploding higher right now. It's as good as it gets. Okay, you got to be really careful in markets. This is the time to sell premium because you know what? You can't feel where we're going to be 3 months from now in this market. Okay. Oh, I know. You're going to listen to some guy in like CNBC tell you the story of why we're going to be higher in the next 3 months. They're always cheerleading the marketplace. Okay. Be realistic. It's as good as it gets. As good as monetary policy is going to get, as good as fiscal policy is going to get. Right. From here, am I saying it's all downside? Absolutely not. It's not all downside. It's all volatility. It's all volatility. We're going to have a merry-go-round of risks that just keep on coming. People, selling premium could potentially bring in, all right, consistent returns. And you can actually minimize your risk doing it. You want to learn to do this, okay? We're going to have to discuss criteria. And I'm going to do just that. If you want to do this the right way, we got to learn criteria and what criteria is about. It's about the little nuances. What trade is the right one? What expiration is correct? How many contracts do I put on? How do I learn that VIX volatility spread? By the way, you want to see a VIX volatility spread? Okay, because somebody always asks me the question. They go, how much is that VIX spread going to cost me? Let me show you. Okay, here's my VIX spread. I'm going to go right to my account statement. This is the VIX spread. The last VIX spread that I put on, here it is. I put it on for a 3-penny credit. That's a VIX volatility spread. This is a VIX volatility spread. I put it on for a 3-penny credit, meaning that I was paid to put my risk mitigation tool in place. The trade has risk, but again, this trade doesn't cost me anything up front. I'm going to reiterate that. The trade doesn't cost me anything up front. Before I go further and I talk about criteria, I'm actually going to show you live trading examples. Listen, in the live trading examples, I am going to show you what we term our Ultima, okay, Theo Theta portfolio for the entire year, okay, year to date. We're going to take you right up from basically like, the last portions of last year just to get you comfortable with it until this exact point in time, okay. Variations of every trade I'm going to show you can be done with as little as $2,000 in a funded brokerage account and can be done inside of retirement accounts, okay. Again, it is critical, right, that you understand this doesn't have to be a big account. Now, the trades I'm going to show you were actually done in a sizable account. I'm just throwing that out there right now. I'm completely no holds barred. To kick it off, I'm just going to show you, this is actually late last year. The reason I'm showing you late last year, I just wanted to make a quick point. What you're looking at right now is a Tesla short call. I sold a Tesla call, the 950 call. I bought the call back. It's an 83% return. But the only reason I'm showing you this, just to get you comfortable with it, here's what you're actually looking at. Let's go into Tesla, okay? Hang with me here for a second. I'm going to open up 360 days in Tesla. So if I open up 360 days in Tesla, okay, you'll start to see trades that were literally done here, okay? Look, there's the 950 call. What you were looking at a moment ago, see that 950 call? Now listen, I do a lot of other trades in Tesla. I'm in and out of this stuff. Here's the 950 call. I sold it for 390. I bought it back for 65 cents. Here it is. Sold for 390, bought for 65 cents. All I'm doing is showing you screenshots from my trading application, okay? So this is the opening transaction, the closing transaction, the exact date and time that the trade was placed, the strike price, it's a call, the opening price, the closing price, the percentage return. You guys ready? Here we go. Another Tesla short call, 90% return. Tesla short call, 58% return. Now timeout. This is where I actually start. I just wanted to get you warmed up a little bit. This is where I started building what we term the Ultima Theo Theta portfolio, okay? At the beginning of this year, okay, I wanted to be very, very decisive, very definitive. And our clients here at Theotrade said, hey, I want to follow every single move that you can make inside of a portfolio. So no problem, done. For years, we've actually shown trades, but in this particular context, the only trades that we're doing are sell side, okay, are Ultima trades, because this is what became hot like late last year, and it's just on fire. And here we are, almost a full year. So in this account, I do elect to be able to trade bonds. I can trade anything I want. This is my account, okay, my money. I'll do what I want. So in this case, every trade that I'm showing you is actually blasted to the masses. You can see the opening, closing, and the percentage return. You ready? 57% return. By the way, bonds, I do trade bonds from time to time, whether you know them or not. Sold the 61 puts, bought back 61 puts. Here's another bond short put. It's the 162 puts, 53% return. Here's an IWM short call, 62% return. Now I'm selling the 231 calls, buying back the 231 calls. Okay, we're all the way into January and closing in February, 53% return here on an IWM short call, Tesla short call, 76% return, SPY short put, 60% return. Now remember, all I've done in this case is I'm going out, selling a bunch of junk out here, selling a bunch of junk over here, and I'm using some VIX hedges, using some gamma irons. It's a party, okay? SPY short put, 50% return. SPY short put, 51% return. SPY short call, 57% return. SPY short call, 49% return. SPY short call, 50% return. QQQ short call, 62% return, 53% return, 50% return, 50% return, 64% return. QQQ short call, 53% return. QQQ short call, 57% return. Are you bored yet? You should be, because we're only in March. 56% return, 50% return, 54% return, 19% loss. Oh, but still my heart. By the way, this is the IWM. The IWM in the earlier portions of this year went straight up. Went straight up and took a 19% loss. It happens, okay? IWM short call, 54% return, 52% return, 49% return, 47% return, 49% return, 51% return, bond short call, 50% return, 54% return, 51% return, 50% return, SPY short call, 50% return, 53% return, bond short put, 50% return, 51% return, 50% return, 52%, 52, bond short put, 53%, 73%. We're in April, 59%, 56%. Okay, I'm just scrolling through and whoops, wait, I saw an equity in there. Look, this is actually Mo. If you haven't noticed, I trade the exact same crap again and again and again and again. It's IWM, it's the spiders, it's the QQQ, sometimes some bonds. Hold on, I'm going to throw a little caveat in here in just a second. I threw Mo in here. I found a pretty good opportunity in there. Bond short put 50%, bond short call 50%, Tesla short call, QQQ short call, Amazon short call 63% return, QQQ short call 50% return, 53% return, 51% return, 50% return. 55% return, QQQ, or sorry, SPY short put, 51%, 51%, 50%, 52%. Timeout. At this point, we got up almost halfway through the year in selling some premium. We took one loss pretty much to that point in time. And I had a lot of clients say, hey, Don, step it up. So I stepped it up. So I started trading the ES option on futures. Why? Because one, ES options on futures contract is worth 5 contracts of the spiders, but it's way cheaper in commissions to actually trade this in the S&P options on futures, because I only have to do 1 contract versus 5 contracts in the spiders. So from here on out, you're going to see a lot of activity in the S&P options on futures. It's the same thing as the spiders, the same thing as the SPX, just different contract size. So I made a 50% return. Here's another one, 50% return. Here's another one, 51%. QQQ, 51%. ES short put, 51%. ES short call, 50%. 51%. 56%. Bond short call, 53%. 50%. Bond short call, 54%. 50%. Now we're getting into summer already. Bond short call, 58%. 54%. 56%. Okay, 31%. By the way, on the 31%, if you're kind of curious about this one, that one got crazy, man. The Qs were like on a tear this summer. Then we actually come to a little bit more of a stepped up trade. When I say stepped up trade, okay, again, what I try to do is, as people are learning throughout the course of the year, what did I start to do? Layer a little bit more complexity into the positions. This is a Christmas tree return, 85%. The Christmas tree, okay, I put it on for a $20.99 credit and closed it for a $3 debit. Think about the profitability in that 85%. This is an absolute grand slam home run. It's an absolute home run in here. Okay. QQQ short call, 57% return. TLT short call, 53%, 55% return, 19%. All right. ES short call, 57%, 50%, 54%. Okay. ES short put, 50%. Here we are all the way to the end of September, 52%. All right. This is an ES short put. This is actually what? Last week, 49% return, all the way to today. I just closed this today. In fact, if you want to see the closed position today, when I say I closed it today, I mean I closed it today. I didn't do a ton of orders today, but there I closed a 5 lot inside of the QQQ, the 405 close, and I closed them for again 31 cents. The other trade I did was with you. I sold that, but again, we give you the absolute full Monty of trades as the entire portfolio that I've done in Theotrade since the inception of trades at the beginning of the year. Again, this is a phenomenal time to do this. What better time to learn a skill set, especially in this volatility that's going to last you a lifetime. The other aspect I always tell people is, when are you ever going to have time like this again? Okay? Most people are still working from home. I say if you're quarantined, I think everybody's pretty much out of quarantine. Maybe not. Some people are getting back in quarantine. I just mentioned the quarantine in there because one of my closest friends in the world lives down in Australia. He had 106 days of quarantine. And it's, I mean, this is a great way to emerge in better financial shape. If you're still working, do it part-time, do it off the side of your desk. This is not going to be sitting in front of the computer, glued to the screen all day long. A little bit about what our members are saying. I'm not going to read all of these, but this comes from September 28th. Kevin said, absolutely love this freaking website, Theotrade. There's so much here, so many different flavors. Cannot pull away for more than 15 minutes. I can't get any work done. Probably shouldn't put that up there, but I could go on, okay? But here comes that short I'm waiting on. Michael Phipps. I want to thank Don Kaufman and Theotrade for doing a great job. And this one says, I really think Theo is the best educational money I ever spent. Okay, listen, we don't have a lot of time. What we're teaching here specifically today is hands off. Like again, this is not sitting in front of the screen glued to it. Most of the order types, okay, to close. And by the way, if you didn't pick up on this, and I will talk about exact hedging, every nuance of this, but if you didn't pick up on this, most of the closing orders can be used what we term set and forget. That's GTC, good till canceled order. So even a fraction of your time is enough to see great results. Here are some of the characteristics, though, of selling premium. You know, one of the things that you really got to focus on here, the attributes of this are undeniable. You never have to buy or sell the stock, right? The risk is limited to precisely your comfort level. You're not going to use stop orders, okay? And I'm going to be honest with you, I totally frown upon this, okay? I frown upon the use of stop orders for selling premium. If you're using them to sell premium, you're going to get destroyed doing that. You can vary timeframes and minimize risk. Probability of profit is high. It's a perfect strategy to enhance a portfolio. Now, you know, if you have a 401k or an IRA, you know that you can actually build the sale of premium around the portfolio, like literally build it around the portfolio. It's an excellent tool for those seeking to build returns of an account, which is most of us. But here's the bottom line too, new products allow for the sale of options in nearly any account size. That's always been the big drawback of doing this is I can't do it. I don't have enough money. Yeah, now you can do it with $2,000 in your account. And you have to build and learn to build a portfolio of options. Do not let options intimidate you. Selling premium, selling options can initially be done for minimal credits, but also minimal risk. But the sale of premium, and everybody has to learn this, okay? It is analogous to like using a massive power saw. If you're going to build a house, you're probably going to use a power saw, right? Zip right through those 2x4s and 2x6s. The same thing is true of options. Options, okay, you know, you want to get it done, you're going to use options. You know, stock is slow, stock is cumbersome, stock can have a huge amount of risk. Options become the power saw of the marketplace. If you don't know how to use a power saw, you lop off a couple of fingers. Options are the exact same thing. Options are going to be the quickest, the fastest, the safest, the easiest way to get where you want to go in this business. But if you don't know how to use the options correctly, you're going to lop off a few fingers. Okay. Listen, you can sell Ultima Premium. You can minimize the risk. Don't let that options thing intimidate you. You need these strategies. And I can't stress this enough. I was actually looking at some of the slides earlier here that I put together, and I'm like, people do not get what's coming. They don't get it. Is this going to turn into a 2008 again? No. Okay. But if you think that markets are just going to continue to grind up forever, right? Like, how do you plan to generate returns over the next 5 to 10 years? If people don't think that way. Are you going to be the best stock picker in the world? Okay. It's not going to make a difference. Everything is correlated now. Everything is correlated. If we go down, we all go down. Meaning that Microsoft goes down and Google goes down, we all go down. Every stock you can possibly dream of, you're like, no, I own Moderna. Okay. That's going down too. I mean, again, it doesn't matter. There's no place to run to, no place to hide. If you haven't seen a down day recently, I was looking the other day, literally, I was looking at the NASDAQ 100 and 100 products in the NASDAQ 100 were down. I looked at the S&P 500, okay, just the other day, it was last week, there was 493 stocks down on the S&P 500, okay? You got to learn how to do this. You are going to need strategies like this for the foreseeable market future. We can show you how. We can show you when to sell premium in a few hours. What we do here at Theotrade, we build detailed recipes for every strategy, okay, including selling Ultima Premium. And I say detailed recipes. You don't bake cake without a recipe. You can't really, I mean, if you've never baked a cake before, you probably couldn't do it without a recipe. But if you looked at the recipe, 20, 30 times, and you baked the cake 20, 30 times, you could probably do it. But people, they trade with no recipe. They just go out there and they just go for it. I say, you got to be prepared. Otherwise, you're going to be fearful of what's coming. Listen, this is what you need to know to successfully sell Ultima Premium for a living. What underlying stocks or indices make the best Ultima Premium selling candidates? Maybe the bonds, IWM, QQQ, spiders. IWM, QQQ, spiders. Did you see my account? S&P options on futures. Did you see my account? Did I change much? All right. I hate to be repetitive, but who cares when it makes money? Like that's the one thing people go, I want a little flavor in here. I want to throw some AMC. No, you don't. No, you don't. You just want to make money. Get in, get out, get on with your life, hold the positions for 30 days, just keep rolling capital over, right? You got to know the candidates that you use, it's everything. You cannot screw this up, okay? What volatility should you seek out? This actually, again, it brings up, like, I love to pick on people about like the AMC. If there's too much volatility, you're dead. If there's not enough volatility, you're dead. Volatility is critically important. It's critically important. Whoever thought that somebody would be out there selling options premium in bonds? Bonds are the most boring thing in the world. No, they're not. Okay. If you look back at some of the months that I've sold bond premium, bond volatility was higher than S&P volatility. You can count on like one hand the number of times that's happened in recent history. Serious about that. Volatility is critically important. Got to know what volatility to seek out. What options expiration do I select? I love to pull this up. When I say options expiration, which options expiration do you want to select? This is Tesla. Tesla's easy. What happens when you're ready to really step up to the mother of all products? Dun, dun, dun. Look at the SPX. There's 1 day, 2 day, 3 day, 6 day, 8 day. Look at all the option expirations on here. What if I told you, okay, you got to hone in on exactly the right expiration. You cannot afford to sell too shallow in time. You can't afford to go too far out in time. There's a sweet spot in here. Volatility is really where we're coming in and making a bunch of money. People think it's option decay, but it's volatility. But the right expiration does everything. What should be the delta of the option I sell? Some people don't even know what delta is. Delta, delta, delta. Okay, what options do I buy against my position? Meaning, like, should I use a VIX volatility spread? Should I use a risk twist spread? What am I to do? All right, how do I build the position? Like literally, when I say how do you build the position, you go out there, it's distribution curve. I sell a bunch of crap out here, sell a bunch of crap out here, hedge over here, hedge over here. Okay, before you know it, woo, I'm smiling. Okay, you got to know how to build the actual position. How many contracts do I use? Do I need a large amount of capital in my account? Absolutely, unequivocally not. $2,000. Okay, I guarantee you can do this now with $2,000 in your account. What is the right amount of risk for me? We can help you dial in specifically amounts of risk. We can also help you dial in the percentage return supposed to be. And I'm not talking about the percentage returns on each individual trade. You know what the percentage returns. What did I do? I opened up positions, okay, and closed them for about what? What did I make on the average position? Anybody? What did I make? What did I make? What did I make? What did I make? What did I make in the average position? 50%. It's spot on. Couldn't be easier. Okay, it's 50%. I mean, the average is probably a little bit above that. It's between 50 to 55%, but generally speaking, it should be right around the 50% mark. Okay. Listen, what a percentage return is supposed to be. How do I protect myself from market crashes when selling options? That's the risk twist spread. Okay. And again, the risk twist spread, it's important. The VIX volatility spread right now, that's our baby. That's the one I'm employing, the VIX volatility spread, because again, when the market goes down, the VIX explodes in value. You have to have preemptive hedges in place because you'll never be able to react fast enough to the marketplace. Preemptive hedges. If you've never heard that terminology, what does a preemptive hedge sound like? Okay. I don't sit there and wait and go, oh, here it comes. Because there's a phrase we use too, like they're Ultima spikes. Ultima spikes are big spikes in volatility. Those big spikes in volatility are opportunity, except most people, they can't handle when the volatility comes. We want to get you in a position that when the volatility comes, when the market crash comes, what are you going to be doing? You're the person that's going to be screaming like a roller coaster, like they're having the best ride of their life. Because when the market's crashing, you're like, sell! You are selling options premium into a crash. What better time? How can you possibly even fathom selling options into a crash? I'll tell you exactly how. You already have a hedge on, okay? It's kind of brilliant. You actually put a hedge in place. So as the market's coming down, you have a nice cushion down below. You want to be selling into a place that is violent. And that's what we do here. That's how we protect ourselves from market crashes, selling options. We use preemptive hedges. Listen, let me show you exactly what we do here at Theotrade. Theotrade creates recipes in trading. Okay, trading, it's all about answering the what ifs. What might be a good, stock or ETF candidate to sell premium? What's the correct options expiration cycle? How much capital do you commit to generating premium? What's the right strike price options to sell? What's the strike price options to buy? How can I overall limit my risk? Okay, Theotrade has the answers to those questions. What we actually build here are recipes with definitive criteria. They're literally checklists for each strategy and each unique variable you're going to encounter. And by the way, when I say checklist, the whole idea of the checklist, I'll tell you exactly where it comes from. It comes from me flying all over the world for about 15 years. Starting in about 2001, I literally flew all over the world and I taught options education to the masses. I mean, again, at one point in my career, we had 7 million clients at TD Ameritrade. And while at TD Ameritrade, while both at Thinkorswim, it obviously dawned on me. I spent a lot of time, obviously, in aircraft. And you hop into an aircraft, the 737 or an Airbus. First thing the pilot does is literally goes through this highly intricate checklist. And I've seen them. I mean, I've literally asked pilots, like, I got to see this. Like, how many steps are in this thing? And sure enough, like step 1, step 2, step 3. What we have built here in every single course that we do at Theotrade is definitive checklists saying step 1, check the liquidity. Step 2, check the volatility. Step 3, select the right expiration cycle. Step 4, what's the delta of the product? Step 5, okay, bid offer spread. Step 6, and it goes through every little nuance to be able to get you into a position. And you think about that, literally checklists to be able to get in there. We even built a Cliff Note version of it after you're comfortable with the entire criteria. But then, okay, once you get into a position, you have to talk about unique variables that you're going to encounter. Once the trade is on, did I put enough hedge in place? Okay, what happens if the market goes up? What if the market goes down? What if the market starts coming towards me? What if there's a dividend payable? What if expiration's coming? What if? Okay, what if? Theotrade is the answer to those questions. We literally will give you the right probability for the trade. How many option contracts for the account size? When do you close your premium sale? What if we sell off big? What do I bail out of a trade? What if we rally massively? Can I fix a losing position? You're going to run into this. It's just, it's the how, it's the when, it's the why, it's at what price. And I'm telling you right now, it's just the beginning of the variables you're going to face while selling Ultima Premium for a living. Again, you can read what selling Ultima Premium is. You can go right now. You can Google. You Google what selling premium and selling Ultima Premium is. Okay, you're going to get 10,000 pages that are going to come up. Be like, yeah, you can sell iron condors. You can sell credit spreads. You can sell this. Maybe you even know how to build a few trades. Okay, but I'm going to tell you right now, nothing, okay, that you're going to Google is going to give you Theotrade's recipe for success. 20+ year trading experience. That's just me. Okay, here at Theotrade, Theotrade's not a one-trick pony. We have 7 other full-time instructors, most of which actually come from market making, okay, Thinkorswim and TD Ameritrade backgrounds. I had access to client order flow for 15 years, viewed and studied millions of trading accounts. Literally, at one point, we had 7 million trading accounts, and I ran education at Thinkorswim and TD Ameritrade for 15 years. We're the largest option order flow in the industry. That's where the criteria comes from. Okay, it comes from attention to detail. It comes from having watched order flow. The following strategy, selling Ultima Premium, the corresponding criteria, okay, it requires the utmost attention to detail. We spent literally years fine-tuning this trade setup, fine-tuning the criteria. And when you approach the section, okay, on criteria, you follow the steps to be able to build a trade. There is a 5-hour course that we've put together, okay? That 5-hour course, I am the instructor for it. Now, everybody immediately looks at the price tag. They, oh, another $500 course. Okay. I'm telling you right now, hold that thought. Stay with me for a second and hold that thought. Okay. the Ultima Income Generator course. Again, I'm the trade instructor. It is a 5-hour course that will deliver to you every nuance of being able to sell premium and mitigate the risk. Okay, the archive of the course. This course was actually done just a few months back. We cleaned it up, we archived it, it's ready to go. It's available immediately for streaming, 24/7 access, okay? But you can also download it and you could watch it even if you're offline on any mobile device. You can use Android, you can use iOS. Theotrade has their own mobile application. We built a full mobile application as well as a website. The class slide deck that includes all of the entry and exit criteria, the checklists, okay, is available immediately for download. Now, before I throw anything up here, because I know everybody immediately, they're like, oh, here it comes, another $500 class, okay? That is not what we do here at Theotrade. Listen, I am aware that there are umpteen different courses out there, okay? In umpteen different places, but I think people are pretty fed up with paying $500 for a class. Then you have to pay $500 for an indicator that goes with the class. Before you know it, you have to pay $500 for a class to learn how to use the indicator, and all of it's obsolete, and you have to pay another $500 for a class, okay? That's not what we do here. And I just make this real simple. Number one, we will give you a phenomenal incentive today if you're interested in Theotrade, okay? I'll just throw that out there right now. I'll tell you exactly what the incentives here are momentarily. Number two, what we do here at Theotrade, okay, is all inclusive. What that effectively means, okay, you come for the Ultima Income Generator course, but we will give you everything that we do, all right? From day one, from inception of Theotrade, which started in 2016 to current time, we give you access to all the archives. We give you access to get you ramped up. If you've never traded an option before, there's specific courses directly towards you. When I say that, okay, I mean, there's an entire, and I'll show you right now, okay? Here is a start here menu, options 101, options 201. But push that aside for a second. We will give you access to everything to get you ramped up. We will give you access to the Ultima Income Generator course. We'll also give you an access to us. We will also go out there and we will literally be firing trades out to you via text message or push notification, whatever works for you. And I say that, what do you mean text message, push notification? It's part of it. We don't just say, here's a class for $500, give you a nice pat on the butt and be like, get out there and make something of yourself. How about this? After today, you can email me. You don't have to email, me specifically if you don't want to. You can email me, okay? And I do mean me. People are like, is this the real Don? Okay, I answer about 4 hours of emails a day. It's just like the lifeblood of what we do here. Like I'm used to it. I've been doing that since, the early Thinkorswim days, okay? TD Ameritrade days, I've always answered emails. Okay, I wouldn't know what to do if I didn't have that. You can email me. You can actually bounce trade ideas off of us. We provide an all-inclusive experience. Okay, and I'm going to tell you right now, we do it for a phenomenal price. You could pay $30,000, okay, on stock market education and not come anywhere near to the level, okay, that we have here at Theotrade. Now, let me actually take you through some of the curriculum, and then I'll give you some of the incentives, okay, and you can see what Theotrade is really about. First of all, the Ultima Income Generator course curriculum. You're going to learn how to generate consistent returns, okay, with the selling options curriculum. Number one, you're going to learn how to build a portfolio of high probability trades, okay? And that's actually going to try to churn monthly returns, okay, regardless if you're starting capital. $2,000 is kind of the minimum over there, or experience. Don't worry about the experience, okay, because we're going to get you ramped up. We're going to give you detailed entry and exit criteria. That's the checklist for selling options premium while keeping risk mitigated. We're also going to talk a little bit about discovering option Greeks. So if you have like a position here, position here, position here, position here, you're like, oh, I can't monitor all this. You're going to learn how to monitor everything by one number. You're going to go, my delta is negative 200. Boom, done. Takes 30 seconds to look at your risk on a day-to-day basis. Okay, probably one of my favorite portions of this class. We're actually going to introduce you and you're going to learn how to use a risk array. You know what a risk array does? It tells you, what if the market goes up 10%, down 10%, up 15%, down 15%? What if we could actually handicap what your risk was going to be before we got there? Think about what that might be worth, not just in this, in all of the positions you've ever done. If the market's going to move up 15% or down 15%, how much are you going to make or lose? Again, we're going to handicap future risk. You're going to learn, okay, how to allocate properly in a way that actually reduces risk, okay, to the portfolio really hands off. It's actually going to make the position more hands off because the allocation portion is very, very efficient. You're going to discover risk mitigation techniques. This is the risk twist spread, the VIX volatility spread. You're never going to be caught off guard by the market. You're also going to learn, of course, how to sell premium in small accounts. There is an entire 90-minute section in this course on how to do it specifically into retirement accounts, okay, with innovative new trading vehicles that have never been available before. This, okay, is Ultima income generation. This is what you want to learn here at Theotrade. On top of it, Theotrade's completely riskless position. There's a 90-day money-back guarantee. I tell everybody right up front, there are no stipulations. You can enroll for Theotrade today. And again, we're going to give you incentives to enroll for Theotrade here momentarily, but enroll for Theotrade today. If it's not for you, listen, if you're not satisfied, when I mean satisfied, what is satisfied? Is there like commentary on satisfaction? Absolutely not. As I said, there's like no stipulations on a money back guarantee. If you're not satisfied anytime in the next 90 days, you don't have to call us. You don't have to do a little dance, make a little love, give blood. Blood is what you need to give to get out. No, this is not like a gym membership. Okay. Just email support@theotrade.com. We'll give you a full refund. Okay. Again, it's a few $100. Don't even worry about it. There are no stipulations. There are none. There's no excuses. You don't have to write us an email. Okay. Listen, life circumstances happen. You think we don't know that? COVID's happening right now. Like, I get it. There's all kinds of life circumstances. No excuses, no questions, no commentary needed. Just email us, ask for your money back. You can go to theotrade.com/skew right now to enroll for it. And I just, you know what? I'll throw this in here just briefly. You go to theotrade.com/skew. When you guys are actually enrolling for this, the first name, last name, email, your address and everything, put your phone number in. I'll mention that again, but put your phone number in when you're enrolling. And I say that specifically because it automatically enrolls you for text messaging. There's not going to be a million texts a week. A busy week, there'll be 4 or 5 text messages in a week. A not so busy week, probably 2 or 3 text messages in a week, somewhere in between. The most rocking week, maybe we'll have like 8 text messages. I just don't want you to think we're going to be text messaging constantly, okay? But this is trades that we're texting out. So put your phone number in there, okay? Anyway, I just wanted to throw that out there, albeit briefly. And again, I'm going to tell you a little bit of what this is. So it's theotrade.com/skew. It's S as in Sam, K as in kick, E as in echo, W, theotrade.com/skew to enroll for it. As I said, we're going to give you a couple of incentives, okay? We get it. You want a bonus. Theotrade goes beyond one class or one indicator. Well, I'm going to explain exactly what that means. I never liked, okay, when these companies went out and sold a class for $500 and sold a class for $500, and okay, all of a sudden, like, class after class after class, you're $10,000 deep in this. Okay, we're very different here. We will give you everything that you're going to need to trade, everything that you're going to need to invest. We're going to do it at one place here at Theotrade and at one price. And that's why I say, okay, you could spend $30,000 and not get the kinds of course curriculums that we have here at Theotrade. Here is the first bonus. I just added this. There's a brand new class coming. The class is coming live October 19th. Look at your calendar. Okay, it's exactly 1 week from today. Live and uncut. I'm actually the trade instructor. This is kind of almost like the follow-up course to Ultima. What we're doing in this course, it's called the Income Accelerator. By the way, I'm actually really excited about this course because I've spent the last month of my life building it. It's a 3-hour course. It's going to be archived immediately. By the way, the class is live. So if you enroll, and as you enroll for Theotrade today, you get access to this class. You don't pay extra for the class. It's part of it. Everything we do here is part of it. The class slide deck that includes entry and exit criteria, the checklist, will be available for download on October 19th. We do everything. Okay. By the way, October 19th, it's the anniversary of the 1987 crash. Couldn't have been a better time to host a class on the anniversary of a crash. Okay, but this class is coming, and it is coming October 19th, and you will gain access to this. And I'm going to tell you right now, this is included in the money back guarantee. If you go to the class and you're like, I did Ultima, I did the class, I'm still not satisfied, we get it. Get your money back. Why do we do that? We want you to want to be here. That's it. We want you to want to be here. By the way, here's the course curriculum, the Income Accelerator curriculum. You're going to learn premium selling techniques previously only available to professional traders. Okay, there is a premium selling technique that we used decades ago that used to take huge amounts of margin. Now you can do it with almost no margin. You're going to discover exactly how to do that and discover how to enhance positions regardless of market bias. So what we're going to do is take, like, if you have a Microsoft stock position, I'm going to take the Microsoft stock position and I'm going to sell stuff against it, not like a covered call. We're going to sell stuff against it and we're going to enhance it. We're going to enhance it way beyond what you could ever do with a covered call without you taking drastic risk. You're going to find income acceleration strategies to produce, like, what, monthly returns against stuff that you already have on. You're actually going to learn how to do this against 401ks or against IRAs, anything that you've got. You're going to learn how to sell premium. You're going to use methodologies taught to hedge funds in order to accelerate any portfolio or individual stock returns. You're going to learn which candidates can produce potentially explosive returns and which are a recipe for disaster. You're also going to learn how to dial in and learn to accelerate all returns. I think you guys are really going to enjoy this class. Again, the class, write it down. It's October 19th. Every Theotrade client, okay, comes to the class. Do you have to hit it live? No, I get it. Life gets in the way. Class is archived though immediately. Other bonuses. We give you a quick start beginner's video guide. Okay. I wanted to show you again what the quick start guide looked like. Here we go. This is a start here menu on Theotrade. By the way, if you're curious what Theotrade looks like, this is Theotrade. Options 101, options 201, options 301. Look, we even have classes called order execution. I spent 15 years in the brokerage business. I'll tell you what, even the most experienced trader in here, you're really going to appreciate the order execution classes. That alone is worth the cost of coming to Theotrade. Dead serious. You watch execution part 1, 2, and 3, that alone is worth the cost of Theotrade. No question about it. Okay, so that's bonus number 1. We get you started and foot in the right direction. Bonus number 2, we give you access to every class that we've done since Theotrade started. So are you getting access to the Ultima Income Generator? Yes. Are you getting access to Guide to Small Account Growth and In-Out Spreads, surviving and thriving in extreme volatility, volatility back spreads, black book spreads, okay? Collecting income, being short, risk twist spreads, all right? Selling premium, minimizing risk, day trading. We have day trading classes. Okay, we have psychology classes, pairs trading, essential skills. Bottom line, right now, okay, you're going to get access to every single class. In fact, if you want to see the classes, this is the archive. Option classes, option newbie classes, technical analysis classes. We're not a one-trick pony here. We're not just option guys, right? We have stocks classes, we have futures classes, we have hedging classes, okay? We got Slim Miller, we got Jeff Bierman, we got Blake Young, all right? We got Brandon Chapman. Like, these are players in this business and have been, okay, in this business. The minimum any of our instructors have had in this business is 15 years as a professional trader. Check it out. Look at just the option classes. Everybody gets access. Sorry, I have to log in, okay? Apparently I'm not logged in. So everybody gets access to every single class, literally, all right, from day one. Everybody gets access to every single class, literally from day one. I'm all messed up over here, okay? I wanted to show you something. All right, it's killing me Smalls, okay? Killing me Smalls. Oh, here we go. So the next big short class. If you want to see how a class is actually laid out, as I click on it, it's killing me here, okay? I've had problems with this computer all day. It's absolutely killing me. So I have too many things logged on right now. Going through, all right, some of the menus, as you actually get into the classes, it is a phenomenal, just phenomenal amount of education, okay? And you can even zero into different specialties from different instructors. All right, onward from there. Next, we give you not only the access to every class since inception here at Theotrade. I'm actually going to go ahead and log out of this and log back in. Okay. And by the way, I'm also going to answer every single question, right? Every single question I possibly can here in just a moment, because I see there's a ton of questions pouring in. So hang with me here for just a second. As you actually go through and generate questions, I'm going to grab each and every one of them. Okay, I'm just logging back into to be able to actually show you a couple of classes in here. All right, down to the portfolios, archives. Here we go. So as I was saying in some of the class archives, and I do apologize, I'm trying to log out and log back in off the side of my screen. This is the Ultima income generator, tracking unusual option activity. Okay, gamma irons, controlling risk, back spreads, volatility crash course. This is just the option geek classes. That's just the option classes. This doesn't include like, like what other kind of classes do you guys have? Okay, as I said, you into technical analysis, right? Jeff Bierman is our, market technician here, market profile class. That's actually Blake Young. Tools to spot explosive moves. Turnabout is fair play, linear regression, MACD. I'm telling you right now, you name a class, it's in there. This is all part of Theotrade. In addition to that, we are going to give you 3 months unlimited access to TheoStream. What TheoStream happens to be, once again, I think the best way to actually kind of enunciate this is to show it to you. Okay, we're going to come right over here to the member chat room. What is that? This is live, people. Okay, when I say it's live,
lengthen out the distribution.
That's actually Corey Rosenblum live right now. Okay, you can see his mouse moving. This is a little bit of market profile as well. Okay, this is the actual chat room. So we're going through. This is where clients can talk to one another. This is us broadcasting our screen to you. You get access to this for 3 months. There are 5 unique portfolios within here, including, of course, Ultima trades. We do in-out spreads. We do text and push notifications, but we broadcast live for 6 hours a day. Now, not everybody can tune in all day, but maybe you have a favorite instructor. Just watch the archive. Every nuance of every single day is archived, and it's archived, okay, to where you can actually download it, watch it at the end of the day, even actually watch it 2 times the speed. Another aspect about this, and something that I weigh heavily into, and I've already mentioned this a few times, we directly answer your trading questions via email. Nobody does that in this business. And if they do, they'll charge you $1,000 a month for it. That's part of Theotrade. Email us, bounce ideas off of us, and we don't shy away from trade questions. Most of us here at Theotrade, okay, have had multiple brokerage licenses. We know exactly, okay, how to take and how to answer trade-related questions. Here are some of the Theotrade instructors: Jeff Bierman, analyst trader, former chief technician for TD Ameritrade. By the way, Jeff Bierman is also a professor of finance at Loyola in Chicago and moonlights with us here at Theotrade. Next, Matt Williamson, market neutral, okay, premium selling option strategist. Matt is like our resident geek engineer, okay, that gets very in-depth in spreadsheets and the sale of market neutral premium. Next in the docket, Corey Rosenblum, CMT. Okay, he's also our senior strategist and our resident swing trader. So again, every one of us has a unique genre in trade. So Corey, again, his specialty is swing trading, and I want to make something clear. Jeff Bierman is also a CMT. Corey Rosenblum is also a CMT. Brandon Chapman, also a CMT. By the way, Jeff Bierman worked with us, of course, at Thinkorswim and TD Ameritrade. Brandon Chapman also worked with us at Thinkorswim and TD Ameritrade. In fact, Brandon wrote the course manuals for the education of TD Ameritrade. So Brandon actually wrote the course manuals for a class that cost $24,000 for 18 months. He'll be the first one to tell you what we do here at Theotrade will blow it away. It's a few $100. Then on the list, we have Steve Slim Miller. Okay, Slim has been in this business longer than a lot of us have been alive. Slim has delivered us, okay, one of the most phenomenal courses here. I can't, speak enough positive things about it. I'll show it to you here in just a moment. Tony Rago, NASDAQ futures and intraday strategist. So Tony, what does Tony do all day? Just calls out NASDAQ setups all day. That's all he does, is just trades NASDAQ. Last, but definitely not least, Blake Young. We've been looking for somebody from market profile, okay, for years. Blake Young has been with us now just over a year, futures, currency, and commodity trader. By the way, Blake also comes from Thinkorswim and TD Ameritrade background. This is actually the crew, everybody kind of working from home lately, okay? Instructors, some of the support crew in here. Next, we give you 59 proprietary indicators and scans. We don't have anything that we don't give you here, and you need to understand that. auto expected move. I'm going to share that link with you momentarily. We give you gravity points. We give you the RSI Laguerre. We give you Quantix, NQ levels, next generation squeeze indicator. Okay. Theo quant trade setup, unusual put options activity, SPX expected move, and more. Okay. It's another $1,800 plus in indicators. Bonus number 4. This is the Theo Theta Live portfolio. What I showed you today, all the trades, okay, that's the portfolio. Portfolio started at the beginning of the year. It's a new positive theta portfolio. It's Ultima premium selling. I am the trade instructor. It's no holds barred approach. Okay. You get to see everything I do. Full disclosure. Every trade that I do, full disclosure. Every opening, closing, hedging positions, you can watch me trade. Okay. To your heart's content. We also have, if you don't have the size to pull off some of the trades that I'm doing, you can do the Theo Theta small portfolio. That is accounts $2,000, $5,000. Okay. Every one of you can follow the Theo Theta small portfolio. And that's where we want people to start in the Theo Theta small portfolio. But this is now available to you. The portfolio is as clean as possible. It's nothing more than a spreadsheet where you see the opening positions, the closed positions. We literally just walk you through. If you do not have time to tune into this, and a lot of people look at this, they go, man, this is a lot. You're doing this, you're doing that, you're doing this. Okay. Yeah. How about this? We just have a weekly update. If you're just coming here to Theotrade, just to learn to sell premium and do it right, okay? Once a week on a Friday, we give you a quick update. On the Friday, we do a 12-minute video. Here is the Theo Theta, okay, weekly update. And you can see once a week, we just come out and we're like, okay, in 12 minutes, we give you an update on every single trade that we've done. These are not trades that you're like, I got to rush in, I got to get out. This is not day trading. This is sell something and do nothing for 30 days, and sell something and do nothing for 30 days. It's about as hands-off as possible gets. In 12 minutes, we'll update you on the trades. And of course, you can follow the trades because they come out on text message. Bonus number 5, technical analysis toolkit. Tech 101, Tech 201, MACD indicators, timing-based trading systems, pattern recognition. There's 21 other technical analysis classes. Bonus number 6, the day trading treasure chest. If you're in day trading, if you do want to sit there all day long, we have a NASDAQ futures trader. Okay. We have an ES futures trader, which is, again, NASDAQ is going to be Tony Rago. The S&P futures, that's going to be none other than Corey Rosenblum. Consistent intraday strategies and setups. Okay. High probability intraday trading systems is 11 other day trading classes. We have you covered. Bonus number 7, mindset mastery. Time out for a second. I'm dead serious. Write this down. Okay. Write it down. This is a class that you want to watch. I told you that there was one of the most, essential classes that we have over here. It's right here. 5 essential building blocks to successful trading. Okay. This is a class that was done by Slim Miller. And when the class first came out, we did charge $1,000. We did sell the class originally by itself when it came out because it was that valuable. It'll change the entire way you approach markets. I don't care how experienced you are in this business. I'm telling you, watch that class. Okay. That class changed literally what I've done. And I was in the business 16 years before, I ever, really worked with Slim Miller. I've known Slim Miller since I'm a kid. Anyway, the 5 essential building blocks to successful trading, 43-year veteran Slim Miller. Serious, that bonus alone, okay, it's worth the cost of admission here. Bonus number 8, a quick start guide to Ultima trades. We actually built kind of like, you get a new piece of technology and you got a little quick start guide. We built a quick start guide specifically for Ultima trades, where it's like a little PDF file. You're just going to flip through and be like, this is exactly how to get started. Okay. Those are your bonuses. What our members are saying. Jeremiah, this came in March, right after the class. My first 4 trades following exactly the details in your Ultima class just closed out using GTC. That's good till canceled orders set right after getting into the trade. This paid for your class in less than a week. I'm very thankful I subscribed to your services. Keep up the good work. Thanks, Jeremiah. Listen, Theotrade includes everything you're going to need to trade to invest. We have classes, coaching, email access to the instructors, live trading room, live trades, indicators and scans. We have mobile access, everything that you're going to need in this business. We've literally built, Theotrade built the Netflix for traders. It's $297 for 3 months. By the way, there's no hesitation in that. This is not an introductory price and it's not a membership. It is, and I want to make this just totally clear because I get 50 questions that are already going to pile in over here. Okay. This is $297 for 3 months. Okay. You enroll today. By the way, after 3 months, everybody asks what happens. After 3 months, we will actually send you an email. Do you want to do it again for 3 months? If the answer is yes, we charge you another $297 for 3 months. This is not a membership, okay? We do not do reoccurring monthly payments, meaning that if you want to do it again, you have to say, I want Theotrade another 3 months. There are currently over 6,000 users on Theotrade, okay? Everything that we've discussed, you get access to. You can go right now to theotrade.com/skew and enroll for it. Now, I'm not completely done yet. I'm going to answer a couple of questions over here. So this is everything you get access to. The Ultimate Income Generator course, you get another 100 classes on top of that, okay? You get new monthly classes. What's the new monthly class? Well, this month is going to be me. It's Income Accelerator Live class. That class is coming October 19th. You get access to it. Live trading room. We broadcast live for a minimum of 6 hours a day. And again, I can't stress enough, like if you can't make it all day, if you want to watch it off the side of your desk because you're working through the course of the day, that's fine too. You can watch us on the phone. You can watch us on an iPad. Indicators, there's 59 proprietary indicators and scans, text push notifications, daily coaching sessions, timely topics. And again, you can email us. One of the things I kind of stress to people, okay, if you emailed us one time, you email us a question one time in the next 3 months, I guarantee you it's worth more than $300 to you. Okay. Why is it $300? Because we came up with a viable price knowing that we would get thousands and thousands of members. So here we are in 2021. We started it in 2016. We are over 6,000 individual subscribers to Theotrade, and we're comfortable with it. I mean, I'm going to tell you guys right now, no one can do what Theotrade does at any price. And that's why we have 8 full-time instructors. Part of the reason we add more instructors is to be able to answer the onslaught of emails that come in over here. Anyway, go to theotrade.com/skew. It's S as in Sam, K as in kick, E as in echo, W to enroll for it right now. To remind everybody, Theotrade is a completely riskless trade. There's a 90-day money-back guarantee, okay? If you're not satisfied anytime in the next 90 days, and I really mean this, anytime in the next 90 days, you're not satisfied, just email us support@theotrade.com, receive a full refund. People, it's $300. It's not going to be a make and break for us, all right? There's no stipulations to the money back guarantee, okay? There's no excuses, no questions, no commentary needed. By the way, if you get a refund, you get to keep bonus number 1. Bonus number 1 is the quick start guide, right? The other thing you get to keep, okay? You're going to get to attend the Income Accelerator class live. There's nothing I can do about that. The moment you actually sign up for Theotrade, you're enrolled. Okay. When I say you're enrolled for the accelerator class. It's coming next week. You get the PDF file, everything. Okay. Listen, we do incentivize you. Get into Theotrade now. We're going to work with you directly. Part of the incentive, we give 30 riskless spots. When I say 30 riskless spots, okay, we opened up 30 and only 30 spots on the Theotrade riskless deal. And we do that specifically to incentivize you to enroll today. I mean, listen, we want people that want to be here. Okay. The other aspect, though, we give you 30 riskless spots. I'll read off the first name of individuals that have actually enrolled today. The other reason we do that is we give you unlimited, literally unlimited email mentoring. And some people take full advantage of that, which is fine. That's what we're here for. Okay. But when you have 6,000 clients and unlimited email mentoring, it gets a little extreme. So we pack in 30 people every time we do one of these webcasts. It's fantastic. Listen, the $297 riskless offer, it's never been available before in this fashion because we're including the Ultimate Income Generator class, okay, and the Income Accelerator, and no stipulations money back guarantee. Again, what our members are saying, close my year-to-date profit from Ultimate Trades is paid for my yearly Theotrade subscription, comes from John. Everything, again, Ultimate Income Generator class, the quick start guide, the 100 classes, okay, VIP membership to, of course, TheoStream. That is our chat room where you get to actually trade with us live for 6.5 hours a day. There's a Theotheta live portfolio. Okay, then we have the technical analysis toolkit, the day trading treasure chest, mindset mastery, which is the Steve Miller class, and the quick start, okay, to ultimate trades. And don't forget, again, there's the There's the class coming on October 19th. Follow me to this link right now. It's theotrade.com/skew. The reason I'm going to actually take you over directly to this link, okay, see if I can actually pull it up. Theotrade.com/skew. Again, just a quick reminder, upcoming Income Accelerator class is live Tuesday, October 19th. It is 10 a.m. to 1 p.m. Eastern time. Okay, it's 7 a.m. to 10 a.m. Pacific. It will be recorded and available immediately following the class. You click add to cart. Okay, when you click add to cart, and I just want to take you through this. Again, it's first name, last name. As I said, put your phone number in the enrollment. Why? Okay, because that will automatically enable you for text messaging. Okay, I'll also throw this out here. You can do a single payment of $297, 2 payments of the 149, or even 3 payments of 100. The only reason I throw this up here is all of them have a money back guarantee. That's completely up to you, but all of them have the money back guarantee. That's why I just wanted to throw this up there for a moment. The other aspect, if you go to theotrade.com/skew, okay, the link for the expected move indicator is found towards the bottom of this page. Those of you that are enrolling right now need not download this. This is already on our site. We'll give you access to every indicator we have. Okay. So again, for those of you as you're enrolling, you just go to this page, theotrade.com/skew. Let me actually pull this up over here. Okay. It's theotrade.com/skew. Click right over here to add to cart. Okay. And in add to cart, put all your billing information in and you're set to go. Now, I'm going to answer a couple of definitive questions over here and keep things kind of lively for the next few minutes while I answer these questions. So, again, what our members are saying, this comes from Jeff. Wanted to drop you a quick email. Okay, I think the class is wonderful. I've been stretched each session, but not beyond my capability. After each session, I watch the recording and do homework. Feel each week that my knowledge of options trading is growing steadily and rapidly. Obviously can't speak for my classmates, but it's going very well for me. Thanks for the great instruction. Okay, this is another email, and I'll just run you through this really quick from Todd Summerall. Okay, it says, I don't know if you remember me, but I emailed you a few weeks ago, and I told you my delta was positive a couple thou or more. Okay, you told me to smash it or I was going to be in trouble. I smashed it. You saved my account. I just want to thank you for your information. Before Theo, I had no clue about Portfolio Delta. Big hearty thanks to you and all of your team. My finances would have been a goner without your advice. You can use this if you want. Thank you very much, Todd Summerall. By the way, the reason I bring this email up, okay, and I'm serious about this, the reason I bring this email up is to show you, you can email us with definitive questions and say, can I do this? Should I do this? We don't shy away from it, okay? We'll pretty much go head on into it. So you don't have to email us and be like, you know, my brother's friend's uncle's monkey has a question about trading. Just tell me what your position is. I mean, hell, I don't care. Copy and paste the position, throw it into the email, okay? Just get it out. We want to see what you have in your account. We want to see what your positions are. Most of us have experience in the trading world. This is not like, you know, some guy that was a cab driver turned option trader. This is option traders, okay, that we actually acquired after years in the business and said, hey, you come here and you're an instructor at Theotrade, but all we do is ask our instructors, just trade live and answer emails. That's it. That's what these people do. All right, let me answer a couple of questions again. As you guys are actually running through here, just to enroll at theotrade.com/skew, I will read off the names. And again, it takes me, okay, just so you guys know, it takes me about 5 to 7 minutes before I actually see your enrollment. In fact, I can even see it on my mobile device over here. So I will read off the names of individuals as you're actually enrolling here for this, just so that you know that you got enrolled, we see your name, and you're into the riskless deal. So a couple of questions answered, and then I'm going to get into specific questions answered. Okay. Everybody always says, what do you need to get started? You need a laptop and internet connection. I'll make an argument here. You don't even need a laptop anymore. Okay. Just use like I don't know, you can use an iPad, you can use an Android. I mean, the cheapest iPad, you don't have to buy a good iPad. I use like $300 iPads. But I use an iPad a tremendous amount now. Everything from trading to watching Theotrade throughout the day. Again, to answering emails. So bottom line, we have everything you're going to need to get started, from absolute novice to some of the most extreme traders. Okay. Number two, just want to clarify again, this is not a membership. We don't do membership. We don't auto renew or auto bill you again. We do not do auto renew, auto bill. I personally, okay, do not like gym membership kind of style commitments. I've never liked it. I assume that you agree with that. So we don't do that here. And yet we still have 6,000 members on Theotrade because, crazy business model here. We do what's actually right. And we look at this and say to ourselves, like, hey, man, I can't stand a gym membership. We assume that most of our clientele are with us. Number 3, we now provide Theo Theta weekly video updates, like so you can follow all the moves. People always ask us, like, I can't watch this all day. What do I do? Tune into the Theo Theta weekly updates. Number 4, we archive everything. Every second of every word of every day is archived because we understand you can't watch every single session. Although some people do. I mean, it's crazy. Some people will literally watch us bell to bell 5 days a week, every class that we do, which is cool. Like, I appreciate that. But if you can't do that, just tune in. I mean, it's $300 for 3 months. Even if you just email this periodically, it's still worth it. You can get as much of this as you want or as little as you want and everything in between. But again, you're getting the stuff texted out to you too. Number 5, we're going to provide you access to Theotrade Mobile so you can download the archives, which means that basically on Theotrade Mobile, it works kind of like Netflix Mobile. You download the archive and you can watch it from 30,000 feet in an aircraft. I know that's exciting. Okay, flying, it's so exciting these days. So in between watching the fights on the aircraft, you can actually stream a little Theotrade in there. Actually, you're not even streaming it, it's downloaded. Number 6, add your cell phone number when you enroll, and you're going to receive access to text messages. If you're not in the United States, okay, and you can't get text messaging, by the way, I'm kind of in the United States. I live in a US territory. But I still get text messages here. But if you're outside the US, it's fine because you can actually do push notifications. So Theotrade Mobile includes push notifications. Continuing on, number 7, you can email us anytime and receive a response within 24 hours, including trade-related questions. One little aspect over here, one huge aspect, I always put in there, receive a response within 24 hours. Okay. The only reason I put that in there, do not email us with 5 minutes to go on an expiration Friday where the volatility is exploding and you're like, do I need to do this? Like, I need help. Okay. You can't email us with 5 minutes to go on expiration. There's one thing you're going to realize here at Theotrade. We traders, okay, we're executing positions. Most of us, like me, I answer my emails early in the morning before the cash open because I'm on Eastern time, or I'm answering them late at night. I have little kids, so usually little Zachy, boom, goes to bed by about 8 o'clock, and I'm usually answering emails again. So sometimes we wish little Zachy would go to bed even earlier than that. Okay, not because I want to answer emails, but little Zachy is exhausting. So yeah, we answer emails, but give us a little time to do that, not into the close, because we trade throughout the course of the day. Number 8, you're going to gain access to every course we've done in the previous 5 years, classes, coaching, every word spoken on Theotrade. Literally since the day Theotrade started, you have access to, and it's all searchable. Okay, meaning that you can actually name any trading topic, any genre of trade, and it's available in there. Number 9, variations of trades are available inside of an IRA or retirement account. In fact, I trade inside of my retirement account with as little as $2,000. Number 10, we can help you get approved at multiple brokers. Do not worry about the brokerage firm, but you have to be open-minded on this because not every brokerage firm lets you do what you want to do. You got to go to brokerage firms now that let you do what you want to do with your money. You have to understand the brokerage business is about them making money and them not taking a lot of risk. So what are we going to do? We're going to put you at a brokerage firm, okay, that'll allow you to trade. And that's important. But there are several major brokerage firms. Again, I come from the brokerage world. I'm very, very intimately familiar with TD Ameritrade, which is now Charles Schwab, with Tastyworks, E-Trade. Okay, we do business with them all. Number 11, okay, there are 30 riskless trade spots available. Nevertheless, there's actually quite a number of names piling in over here right now, and we will update you on those here momentarily. We'll read off a couple of names. Number 12, of course, take action, enroll for Theotrade now. There's just absolutely no risk over here. By the way, I'm going to read off the first batch of names here momentarily. As I said, it takes 5 to 7 minutes before I actually see your name come through here. Again, I'm just going to throw the web address up here once again for those of you, because there was a couple of questions that popped in over here. Again, it's theotrade.com/skew. And that is the web address. Just the first batch of names that popped through. Sheldon S. from California, Gregory B. from Wisconsin. Brione L from Minnesota, Robert M from North Carolina, Jim B from Canada, Ramona H from Nebraska, and Lewan S from Arizona. Those are the first batches of names that have actually come through in here, and I see a few more piling in right now, which I'll read off here momentarily. Now I'm going to get to some of the specific questions that you guys had in the chat room. By the way, again, those are individuals that are enrolled and are enrolled specifically for the riskless deal. So the first one actually comes. First question comes from Robert. Do you also give us the exact hedge with each trade? Okay. The answer is absolutely unequivocally yes. So when I do anything in the Theo Theta portfolio or the Theo Theta small portfolio, okay, it is complete full Monty in terms of what I do, meaning that you get to see every nuance of every trade, including the hedges. You get to see the contract size that I'm trading. I mean, literally everything verbatim is on there. And I'm actually right now, I'm literally trading inside of 2 separate accounts. And by the way, you get to see everything here, profit, loss, everything in between. Okay. I'm actually going to show you here momentarily. I say profit, loss, everything in between. Okay. Good, bad, or indifferent. Here's a trading account. This is one account. You can see the profit and loss in the day. This is real time. Okay. Here's an IRA account. Profit and loss in here, of course, it's real time. All right. Then, of course, I've got the Tastyworks account. You're going to see a lot going on now inside of the Tastyworks account. Every profit, every loss. Okay. We let you see as I said, it's kind of the full Monty of trading. All right. Next on here, are the number of contracts on the hedge side the same as the number of contracts on the calls and put? Absolutely not. The hedge is completely dependent upon where the risk is being taken. You have to understand something about hedging. The hedging might be done in the VIX against the spiders. The hedging might be done in the VIX against the S&P options and futures. So contract size doesn't mesh. And it's actually about $1 hedge. You know that your VIX trade could make, for instance, $10,000, but you may have $100,000 of risk. Obviously, that wouldn't mesh. Well, you can take that anywhere from a $2,000 account to a $2 million account. And we use a very, very simple premise to teach you how much hedge, like how much risk mitigation do you need for how much contract size you're using. And it's, the only way to actually do that is through what's termed a risk array, which is actually taught in the class. It is not, a perfect one-for-one though. Okay. By the way, isn't the other reason the price on options, options on futures trade 23 hours a day? Yeah, so options on futures are open 23 hours a day, but they're not really tradable in the off hours. So that's not really part of the reason that I trade them. I trade the options and futures. Well, you'll see exactly why I trade them, but specifically the options and futures, because they're massively liquid now and they'll actually save you in transaction costs. So, okay. Oh, somebody said, please confirm that you place all 3 hedges on every trade, okay, before you sell calls and puts. Actually, the answer is absolutely unequivocally not. Okay, I don't place all 3 hedges. Okay, there's a selection of hedges. Certain hedges work better in different market environments and different conditions. So a little hedge here, a little hedge there. It just depends on the time frame. So it depends on the time frame to a degree. And when I say it depends on the time frame, right now the skew is still incredibly high. And because the skew is high, the risk to a spread doesn't work nearly as well. So now we have to use a VIX volatility spread and a gamma iron. It just depends on the time frame and what's going on in the conditions of the overall marketplace. Somebody said, but with every hedge, okay, on every trade, aren't the returns reduced substantially? No, not even close. The returns are reduced nominally. In fact, as I think I showed this a little bit earlier here, but this is an IRA. Back over to the main portfolio. The one hedge that I displayed to you was in VIX. Okay, most of these VIX trades, look, penny credit, 10-cent credit, 10-cent credit, $1.90 credit. Okay, here's a little bit of a debit. The point that I'm trying to make, okay, is that the hedge not only didn't cost me anything up front, but most of the hedges were actually put on for very small credits. Okay. So, oh, I like this one that came in. How would the Tesla be hedged? Yeah, that's actually something you're going to have to watch the class for. Okay. That's the, that is the Ultima class itself. So how's the Tesla hedged? Okay. Wait till you see what the skew is inside of Tesla. It is good eats, people. It is good eats in a product like Tesla. How many trades per week are you looking at? It varies depending upon volatility. Okay. If you're an individual, like some people just are hell bent on this. A lot of people enter this market, they go, I will do 2 trades a month. I will do 3 trades, a week. We don't do that. You kind of ebb and flow with whatever volatility is doing. Like, you know, traders, okay, you're a function. You're just a function of whatever the market's doing at any given point in time. When the markets are rocking, I'm going to fire out more trades. And the markets are totally docile like today. I mean, look at today. Today is a total slop fest. When I call it a slop fest, I'm not trying to be facetious. I mean, the markets are sloppy right now. When the markets are sloppy, they're basically flat on the day. Okay. How many trades have actually done today? Here, 2 orders, 2 fills. That's it. Okay. I actually bought back some QQQ stuff that was profitable. I'm waiting to actually buy back this other one. Okay. And by the way, yes, these are literal numbers in here. Right. It's a 5 lot in here. This is actually a big spider Christmas tree spread. It's up 136%, but it's a slop fest today. So I'm not placing a lot of trades. If the volatility starts rocking though, you better believe I'm going to step in and I'm starting to sell some more premium in there. So I'm going to do more trades as a function of it. By the way, another batch of names just came through. Let me read these off. Dan D from Illinois, Phil W from Arizona, Jeffrey W from New Jersey, Daniel S from Canada, Mark R from Pennsylvania, Joseph A from California, Ronald Y from, again, Pennsylvania, Doug C from Georgia. So just reading off a couple of names, those that have enrolled. And again, I appreciate everybody that, of course, is enrolled. And by the way, you guys can jump into Theotrade right now. The day is not over. There's still, 24 minutes left inside of the trading session. You can listen to Corey Rosenblum. I come on every morning at the cash open, meaning that from 9:30 to 10:30, that's my slot every day. I like to trade with you guys like the very first hour of the day, just kind of set up, the notion of what that day is ultimately going to look like. With that, again, you're going to learn a huge amount. Like the last question that came in here, is there an equivalent, a put spread in a, to a covered call in here? And by the way, don't worry about spreads versus covered calls. One of the things the class is going to teach, it's going to teach how to actually mitigate your exposure from naked options. And as I said, you are not going to have to worry substantially about margin. We'll actually circumnavigate margin. That's a big portion of the Ultima premium selling class. Again, I do hope that you guys will also join me, not only for the Ultima class, which you can start listening to right now, but more importantly and more appropriately, there's a class coming, and it's coming literally a week from now. It's the Income Accelerator class. It's Tuesday, October 19th. Okay. Enrolling today enrolls you for that class as well. Okay, you're like, where's the class going to be held? It's going to be held right in the main chat room. In the main chat room, we blank the schedule, and next week we go live. And I go live, and I'll just take up literally like 3-4 hours, the normal like day, and I'll just pack a class into a given day. So by all means, again, click add to cart, Ultimate Income Generator class. It's theotrade.com/skew. I want to thank everybody for joining us this afternoon. Have a wonderful afternoon.